The situation with Iran is going to be with us for a little while.
President Trump, Israel are all stepping into a massive realm of uncertainty.
Higher oil prices as being more of a tax on the consumer and a headwind to growth.
What we are really focused on is the path that this conflict takes.
Diplomacy is the key here.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, the United States strikes Iran.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
President Trump unleashing American military power to strike several nuclear targets. The White House claiming Iran's heavily fortified sites were totally obliterated. Investors this morning are fading escalation risk as the rally in crude loses steam and equity markets turn positive.
2 takeaways, and welcome back, John. It's great to have you back. 2 takeaways from the price action overnight. First of all, the traders in European and Asian hours seem to care a lot more about geopolitical risk than U.S. traders or those in the U.S. hours, where they seem a little bit more cynical. And the second thing is that this is a market that has faced time and time again, once-in-a-lifetime shocks pretty much every single day. They are tired, and they are fading anything because if they sell, they get burned.
Peter Tchir of Academy Securities joining the program a little bit later. Annmarie with this line: the attacks help establish deterrence and peace through strength. He's not the only one that has that view so far this morning.
This whole idea of escalate to de-escalate. And the question everyone is waking up to this morning is what is going to be Iran's response and retaliation? If you go back to 2020, when this president decided to strike Qasem Soleimani, what you saw is Iran retaliate, but through back channels tell the United States, we will retaliate, but then we want to be done. Everyone is waking up with the same question. What is the retaliation going to be? Is it going to be cyber attacks, Strait of Hormuz? Is it going to be on U.S. air personnel and bases in the region? That is a big question, but the market right now is shrugging it off.
It's Saturday night when you saw these headlines cross. These probably aren't the moves you were expecting on Monday morning. Crude up by just 0.9% on WTI. Brent crude just short of 78.
Especially because heading into this, so many people said if the U.S. were to strike Iran directly, that would be a complete game changer for both markets, for the global economy, for the entire region. Now people are saying maybe they're looking to de-escalate by saying that the damage wasn't so significant. Maybe we can handle this. And if anything, it gives the region more security. It highlights the bias to actually outperform. And maybe that is telling us more signal than noise.
And a lot of analysts would tell you if there was a direct strike from the United States on Iran, that potentially Iran would take the move to close the Strait of Hormuz. We've seen Iranian reports that the parliament wants to do that, but the Ayatollah has to explicitly sign off on that. And what you heard from Secretary Rubio, what you heard from J.D. Vance, the vice president, and independent analysts as well, is that if Iran were to do that, it would be a suicidal mission for their own economy.
Equity futures so far this morning just about positive, up by 0.2% on the S&P. Coming up this hour, we'll catch up with Norman Roule of CSIS following U.S. strikes on Iran. Calvasina of RBC as traders await Iran's next move. And Daan Struyven of Goldman Sachs as the rally in crude fades. We begin this hour with our top story. The world bracing for Iran's response after the U.S. attacked several nuclear sites. Our team coverage starts right now with Bloomberg's Jemana Basechi in Dubai and Tyler Kendall in Washington, D.C. Tyler, first of all to you. Let's think about this. What does the early battle damage assessment indicate so far?
Yeah, hey, John, good morning. Well, if you asked President Trump, we saw in a flurry of posts on Truth Social so far that he said that the damage inflicted by these strikes has been monumental in his words. But we should say that U.S. officials have confirmed that it is going to take some time to see a further damage assessment. And we heard from the International Atomic Energy Agency yesterday as they briefed the UN Security Council saying that their inspectors at the moment aren't able to access these sites to do their damage survey. It is something, though, that we're going to be watching closely, and whether or not the U.S. feels that it does need to potentially go back in when it does come to these strikes. At the moment, the U.S. says that the next steps here is that they are calling for Iran to resume talks over its nuclear program. President Trump threatening further action if they don't come to the table. But we should say Iranian officials have reiterated that can't happen unless the strikes against them stop first. It's something that we're going to be closely watching as it comes to any sort of potential retaliation against Iran. Annmarie, from Iran, I should say. Annmarie mentioned it it at the top of the program, that potentially we could see a more tempered response here. And John, our analysts at Bloomberg say that could come from a few different factors, including that Iran has a weak economy. There does appear to be this growing domestic discontent, but also at the moment, we haven't really seen Iran's strategic allies offer anything further than rhetorical support.
Jemana, let's build on some of that reaction in the region so far and the prospect of retaliation.
Well, the region woke up to a very different situation yesterday. I should tell you, for Gulf states, there is a lot of tension. You even hear of airlines like British Airways, Singapore Airlines halting flights into Dubai and Doha. This is unprecedented. It hasn't happened in many, many years. And that really is suggestive of just how people are feeling about the potential for Iranian retaliation here. What is certain is that Iran will retaliate somehow. The question is how. Will they go for a targeted response similar to what happened back in 2020 when the U.S. took out Qasem Soleimani, that key military commander? It took Iran 5 days to respond. And when they did, they telegraphed what they were going to do to the U.S. So they struck at a U.S. military site in Iraq, but there were no fatalities recorded at the time. And it was almost one and done. So it was done. To rephrase what Annmarie was saying, they escalated to de-escalate. But they could go down more escalatory routes. They could target U.S. assets within the Gulf. But again, that would be deemed as inflammatory versus these Gulf states, because the Gulf states themselves have been trying over the last couple of years to bring down the temperature in the region and reestablish diplomatic relations with Iran. Do they want to flare up tensions with these Gulf states as well is a big question. And then, of course, there's been a lot of talk about the Strait of Hormuz and whether they would go down that route. Yesterday, a lot of headlines being circulated about the Iranian parliament agreeing to cause a blockade or shut down the Strait of Hormuz. Ultimately, that decision still rests with the Ayatollah and the National Security Council. They haven't made a decision there. And there, the trade-off is going to be, will Iran be willing to accept the possibility of their own exports being cut off from their major buyers in Asia, and that is, of course, China, for the very act of inflicting higher oil prices on U.S. consumers? Is it going to be worth that shock to the global economy? And at this point, we don't know whether they're going to pull the plug on that.
Jemana Basechi, Tyler Kendall, Jemana Tyler, thank you. More from them in the next hour. To extend the conversation, the former senior US intelligence official Norman Rule joins us now for more. Norman, welcome back to the programme, sir. Just a quote from the Defence Secretary, Pete Hegseth, called it an incredible and overwhelming success. How should we define success this Monday morning?
Good morning. Well, we have a changed Middle East. The United States and Israel have conducted devastating attacks against all of Iran's air defenses, leadership, nuclear programs, and Iran's response has been generally feeble. What response Iran has been able to conduct, to include missile attacks against Israel, have not impacted the strategic course of the conflict. The numbers are moving in a direction where Iran's missile program is being whittled away, and Iran's nuclear program is effectively destroyed. There will be elements that remain, there will be elements that are concerning, but its nuclear program is effectively destroyed.
Norman, no one really understands Iran quite like you. What do you think the Ayatollah is weighing up right now, the menu of options, in terms of a response?
Well, there are many people who understand Iran far better than me, but within Iran, the decision-making structure is going to be challenged. His leadership has been changed. He himself is in a difficult, hidden location. Some of his leadership is being hunted, perhaps, by the Israelis. They're under attack. Their economy is poor. Their population is restive. Let me give you an example of options and the challenges. If they close the Strait of Hormuz, they close off many of the foodstuffs, the vegetable oils, the primary goods that come into their country to feed the population. Now, that is something that you really don't want to do at a time when your population may erupt into major unrest. So they have many challenges with all of the decisions they make. But again, if they close the Strait of Hormuz, it does not impact Israel. And it will bring in the United States and could likely lead to the end of the regime.
Do you think these strikes get Iran to the table? The president continues to say he wants to see a diplomatic path forward.
Not immediately, but what it does do is it tells the world that the United States is pushing for diplomacy, and that actually encourages the world to push back on Iran's efforts to escalate the conflict or isolate the United States. So in the past, in some cases, the United States seemed as the aggressor or alone, but the United States is in essence saying you can't have a program that is moving towards a nuclear weapon, but we're interested in a diplomatic deal. Be reasonable. Iran is not being reasonable, and it has no allies.
Norman, you said that the nuclear program has effectively been destroyed. There's a lot of concern among a number of circles about the 400 kilograms of enriched uranium that have gone missing that previously were held near Isfahan, as well as equipment that was taken out of Fordo before the attacks. Do you have any sense of either where that could be or how close that could be to restarting some of the nuclear programs that Iran previously had?
So those are valid concerns. So we should be concerned about Iran's remaining nuclear material. It will have nuclear scientists, it will have nuclear knowledge, and it will have parts and equipment related to centrifuges that it did not declare to the IAEA that it could, in theory, assemble and recreate in a covert facility. But let's think about that for a minute. If you believe what you read in the newspapers, the United States and Israel have some extremely good intelligence on Iran. So they're going to have to put this together, get away with it, and then the United States and Israel are going to have to not learn about it and not destroy it. Now, that's possible, but it's unlikely. But it is something that's going to require diplomatic pressure so that it can be identified and removed, and it's probably a card Iran will play in the talks.
What do you think the foreign minister of Iran is doing over in Russia today? We know that he is meeting with Vladimir Putin, and there's a real question around what the ask is and whether there will be the response that Iranians are looking for.
Diplomatic support, pressure in the UN. Iran has obtained consistent diplomatic support at the United Nations Security Council, the International Atomic Energy Agency, and other diplomatic fora from Russia and China over the years. In fact, these two countries have blocked any major pressure on Iran for its proliferation of missiles, nuclear program, and terrorism. And this is really the moment where these two countries can produce this. It's unlikely that either of these countries are going to provide any military support. The strategic agreement that has been signed between Russia and Iran, it doesn't provide for that sort of relationship. But Iran, again, it has no allies, but it does have partners who have provided support in international fora that may help on diplomatic talks.
Norman, just before you go, just a brief assessment of this operation. 37 hours long, 125 aircraft, B-2 bombers, 4th and 5th generation fighters as well, 30,000-pound bunker buster bombs, missiles launched from a submarine as well. Norman, how smooth, how well executed were the logistics, the precision of this operation?
This operation speaks to the training, leadership, and the technology that the United States military has had for a number of years. This operation has been stated in the press, has been practiced for many years. This is not something that has occurred in any recent administration, but this recent administration did have to refine it significantly, match the target set. But what you are seeing is a technology and capability and leadership that no country can match. And I think North Korea and other countries in the world, to include China and Russia, are looking in the past weeks and saying the world is also a little different from their perspective.
It's a strong final point. Norman, appreciate your time, sir. Norman Roule there, the former senior US intelligence official. For those of you just tuning in, welcome to the programme. I'm sure you want to know where the market is. Equity futures at the moment positive on the S&P 500, and the rally in crude fades. Positive at the moment by about 1% on Brent and WTI, up to about 74 on WTI crude. Brent crude at the moment, 77.63. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Good morning, John. Here's the latest on the conflict. Iran is vowing retaliation against the U.S. following the strikes on its nuclear facilities Saturday evening. President Trump declared Iran's nuclear program had been completely and totally obliterated, but senior officials, including Vice President J.D. Vance and the head of the International Atomic Energy Agency, say they don't know the fate of Iran's uranium stockpile. Meanwhile, British Airways and Singapore Airlines have canceled flights to the Persian Gulf after the strikes. BA canceled several flights to Dubai, including diverting 2 planes. It also halted some flights to Qatar and Bahrain. Singapore Airlines canceled 2 flights on Sunday between Singapore and Dubai, warning other flights may also be affected. And major U.S. cities, including New York, Washington, and Los Angeles, are tightening security after Iran warned it was reserving all options to respond to the U.S. strikes. Police have increased patrols at places of worship, diplomatic facilities, and public spaces. Officials say no credible threats currently exist, but are urging people to be vigilant. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on in the hour. Up next on the program, total obliteration.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
Up next on the program, Lori Calvasina of RBC, and later at 7:30 Eastern Time, the former U.S. Secretary of Defense, Mark Esper. Live from New York City this morning. Good morning. Three-day slide on the S&P 500 through Friday. Coming into Monday, we bounce back. Here's the bounce, up by 0.2%. We fade escalation risk in the Middle East. On the Nasdaq 100, up by 0.2%. I'm sure one of the first things you looked for when you woke up this morning was the move in crude. Well, this is what it looks like. It fades and fades quickly. It's still fading. Higher now by just 0.5% on Brent. On WTI, up by 0.6, 74.27. Under surveillance this morning, total obliteration.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Our objective was the destruction of Iran's nuclear enrichment capacity and a stop to the nuclear threat posed by the world's #1 state sponsor of terror. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
So here's the latest this morning. The White House claiming complete destruction of 3 Iranian nuclear facilities. Iran vowing retaliation and continuing attacks on Israel. Lori Calvasina of RBC writes the following. It has been and remains our belief that the longer and broader the conflict becomes, the more challenging it could be for U.S. equities. Lori joins us now for more. Lori, good morning.
Good morning.
Obviously a seismic event for international relations. What kind of event is this for financial markets?
So look, I think unfortunately for U.S. equity investors, we're a little bit in wait and see mode, and I think we're playing second fiddle to the crude market right now. I think there's been a lot of focus on what's the potential disruption to energy supplies, and I'm not saying that's the wrong focus, but I think there's also a second transmission mechanism that we need to think about that's going to take a little more time to play out, and that's the impact on sentiment. This market has really been boosted by very, very modest recoveries in consumer sentiment, small business sentiment, investor sentiment has surged. Corporate sentiment is actually still in the toilet if you look at last week's Business Roundtable survey, but just that little bit of improvement that we've seen on the consumer and small business side has just boosted investor sentiment on the AAI survey enormously. So I think we need to watch that. We're not going to get any reads on that this week, but I think it's a little bit early to declare the all clear.
Well, let's start with the relationship between the oil market, which everyone is watching, and this equity market. Beyond the obvious, what is that relationship at the moment?
So look, I think it's a question of what's the feedback loop, not only on sentiment, but also on inflation down the road. And that's where everybody's been myopically focused. I do think energy, if you do studies where you look at it as a percent of S&P earnings and that sort of thing, or even as cost structures, that's come down over time. So there's maybe less immediate risk there. But I do think that we really go back to this sentiment idea. And we're already sort of in a challenging or tricky state, as I like to call it, where things feel a little bit fragile, a little bit on the edge, and a lot is dependent on the idea that corporates are just going to kind of manage through, not lay people off, that we're not going to see big impacts on demand. I'm not so sure that we can make that assessment here. We've seen geopolitical references creeping up in earnings transcripts already. We've seen cost-cutting commentary creeping up in transcripts already. And if you looked at the companies that actually reported last week, they had a pretty sour tone. So, I think we're going to have to let some of this play out.
Yesterday, or I should say last week, Alex Altman of Barclays was on the show, and he was talking about how the fact that this market fades any potential geopolitical risk highlights its strength and the bullish undertone to really light positioning and the lack of really ebullient feelings toward the U.S. market. Why isn't it a bullish sign that people can shrug this off, even in the face of something that last week they were saying would be hugely disruptive?
So look, I'll tell you the two analogies that have jumped into my head in the past, kind of week or so. One is I'm going back to late 2021 when I was spending a lot of time with my commodity strategist, Halima Croft, and she was shouting from the rooftops about Russia invading Ukraine, and nobody wanted to hear it. And we really saw something that I think has become a pattern, which is until geopolitical risk just smacks you in the face, and I think this time it would be the oil price disruption, investors just don't want to price it in. But just the sort of disconnect I'm seeing between equity investors not wanting to sort of focus on this risk and some loud voices, not just Halima's, but in the geopolitical strategy community saying, y'all need to take this seriously. We've seen that story before, and it didn't necessarily go the equity market's way. The other analogy that's jumped into my head this morning is just thinking back to the early conversations at the beginning of the year on tariffs, where it was, well, this is not going to happen because it's too irrational, it's going to hurt the U.S. economy. We're seeing a lot of that commentary now coming out about supply disruption and the Strait of Hormuz. And so, I would just say, let's just all take a breath, right? Because just because the market is being resilient doesn't mean that the risk isn't going to come back and bite it later.
There was one comment that was being made over the weekend, which is that any military conflict tends to be stimulative to an economy. Each of those B-2 bombers cost $2 billion. The bunker busters each cost hundreds of millions of dollars to manufacture. Why isn't any kind of military conflict potentially on the margin stimulative if you think about the spending that would have to go into it?
Well, look, I would say we've already been seeing industrial stocks in particular and defense stocks as well. They've already been bid up. And if we look at industrial valuations as a whole for the broader sector, you're trading close to 3 standard deviations above the long-term average on both an absolute and relative PE. So, I don't deny the fundamentals, but the valuations have already been pretty optimistic on earnings that haven't even come close to materializing yet. I think the other thing that we've learned over time is that wars also tend to be inflationary. And so I think that's something else we need to keep in the back of our mind as we're considering what the ripple effects are.
You mentioned Halima. She had a great note last night. I'm looking at it now, and she talks about how it may take weeks even for Iran to respond, and this knee-jerk reaction of the worst is behind us is really short-sighted. Do you think that's also the case for the equity market?
I think the equity market is to some extent trading on that. And, one question we got from investors last week was, and we were doing a big call with investors, and a question came through, are markets just sort of pricing in sort of the better conditions on the other side of all this? And I think there's been this view as well, if you think about just sort of everything we've gone through from a policy perspective and the reverberations on the domestic economy, like, hey, yeah, there may be potholes, but they're not going to be that bad, so let's just look ahead to 2026. The risk here, whether you're looking at geopolitics or whether you're looking at some of those other domestic economic issues, is that the potholes could be bigger and a bit more difficult to push through than markets have anticipated. And I think one of the brilliant things Halima is saying right now is that the market seems to be focused on, are they going to close the Strait of Hormuz, yes or no? And she thinks it's more complicated than that. And I'm not the one to sort of talk on those issues, but I think she's seen some nuance that the market may be missing.
Are you advocating for a defensive posture here?
So what we've been saying all year is have some balance between defensives and cyclicality. So we've kept our utilities overweight on all year. And if you actually go back and look at 2022 and the oil price spike that we had around the Russia-Ukraine invasion, it was the second best performer behind energy.
Why was that?
What's that?
Why was that?
I think it was just a knee-jerk reaction, and I think also at the time we had some reasonable valuations in utilities. At this point in time, we sort of look at them as a clean defensive. They don't have some of the policy overhangs that things like healthcare and consumer staples have. They're not cheap, they're not that expensive, and it's really just an easy place to park some money and collect some yield.
Not getting a crude spike this morning, at least not for now. Laurie Calvasina of RBC. Laurie, thank you. Overnight, a rally of almost 4-5% on crude. We fade that. Leads to positive now by 0.4% on both WTI and Brent.
Why is it that traders in European and Asian hours seem
Is that
to
what
react?
you're putting it down to?
Well, it seems like they react much more to geopolitical risks, to tariffs. You saw this with any kind of proclamation. And then the U.S. traders come in and they're just super cynical and saying, whatever, we're going to buy that dip and take advantage of it. And they've won. And that's something that we've seen repeatedly.
We're blaming European and Asian traders for the action overnight.
I'm
just
all saying, I'm not blaming them. I'm just saying, okay.
They're getting it wrong? Are we saying they're getting it wrong?
It has been a pattern.
Okay.
It's been at least 3 times. 3 times makes a pattern. I'm just pointing out what I'm observing.
I'm following the same pattern. WTI crude this morning up by 0.4%. Up next, we'll talk about the oil market with Daan Struyven of Goldman Sachs as the rally in crude fades. From New York City, this is Bloomberg. It's going to be a hot one on the East Coast this week, breaking into triple digits here in New York City in the next 24 hours. Summer has officially arrived. Equity futures on the S&P so far this morning positive by 0.1%, bouncing back from a three-day slide. We're higher by 0.13% on the Nasdaq 100. For some single movers this morning, your morning movers, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Overall markets might be muted, but you are seeing some single stock reactions that have been fading, to be fair, to the actions over the weekend. The airlines in the pre-market session opened up sharply lower. Some of that is starting to come back. You're still looking at United, for example, down 0.5%. Delta, a big comeback for them. They were down about 0.7, now down about 0.1. We've seen some of these major airlines like British Airways, for example, close flights to Doha. So there is just serious disruption when it comes to airline routes. Even though the oil move, that also has been fading, you are still seeing a bid into the energy stocks this morning. Occidental, for example, as high as 2%, Exxon 1.5%, ConocoPhillips up 1.3% this morning. Finally, there was a journal story over the weekend that Bank of New York Mellon was having talks, at least last week, with Northern Trust about possibly buying its smaller rival. Those talks happened between the CEOs. No decision there yet at the moment. BNY still evaluating next steps. Even so, Northern Trust up nearly 5.5% in the pre-market, John.
Danny, thanks for that. More from Danny in about an hour from now. On our radar this morning, our top story, President Trump unleashing American military power to strike key Iranian nuclear sites. So far, satellite images show craters and possible collapsed entrances. International monitors are still assessing the damage. Market participants are focused on retaliation. Iran vowing to retaliate after the US struck its nuclear sites. A spokesperson saying the US should, quote, expect severe consequences and it reserves all retaliatory options.
Yeah, this really is the key question. Are we seeing really a walking back potentially of some of the tensions with Iran, saying that there was limited damage? This question of, are they giving themselves an off-ramp to do what they did after what we saw with Soleimani when he was killed in 2020? The real key here is how much damage has been done and how much does Ayatollah Khomeini still rule? I mean, where is he? Honestly, at this point, where is Ayatollah Khomeini, who essentially has to sign off on absolutely anything?
He's hiding in a bunker, which is why the chain of command has been completely challenged and disrupted, as Norman Roule was telling us, who is a former CIA official. The fact of the matter is, if he's going to take a measure like closing the Strait of Hormuz, he has to explicitly give that command. And right now, the chain of command is very challenging. But Iran, it will weigh all of its options. Is it going to be striking U.S. personnel at military air bases? Could it be a cyber attack? Or will it be a Strait of Hormuz, which most people say this is just shooting themselves in the foot?
One industry very much in focus at the moment, and that is the shipping industry, very much on high alert. Two supertankers U-turning in the Strait of Hormuz before at least one returned to the waterway. This coming as fears rise that Tehran could retaliate against commercial vessels. Joining us now to discuss is Bloomberg's Alex Longley. Alex, just build on some of the data you're looking at, the flow of traffic in and out of a very important strait.
Yeah, I think for the most part, things are looking fairly normal at the moment. I think one of the big issues for the shipping market is trying to parse exactly what the situation is on the ground. We had warnings from navies in the area yesterday kind of saying the threat to shipping is elevated, particularly for US affiliated commercial ships. But the reality on the ground is that there hasn't been a huge amount of change. We saw these two ships U-turn as they got into the Strait of Hormuz yesterday. They've actually now both U-turned to go back to Hormuz. And I think that probably tells you something about the sort of volatility of the situation we're seeing. Tanker earnings have been pushing dramatically higher over recent weeks. We expect them to rise again today. But for the most part, it's business as usual. And that is why you're seeing crude oil prices retrace lower after that gain we saw at the open earlier.
Alex, just how easy is it to insure some of these tankers at the moment?
I think it's a mix. Actually, when you talk to a lot of the war insurers here in London, compared to some of the issues we've seen in the last couple of years, think about ships being sunk in the Red Sea, for example, they're fairly calm on the risk in the Persian Gulf at the moment. I think the issue is the volatility. We had Marcus Baker, head of the world's biggest marine insurance broker, on TV this morning saying one of the things he's not seen before that's happening now is shorter quotes. And I think it's that volatility in the insurance market that underwriters are looking at. Rates haven't soared, but insuring against risk could change at any moment. The cost of those rates could change at any any moment, and that's why we're seeing shorter quotes. But for the time being, again, underwriters fairly calm on managing those risks, given what we've seen so far in the Persian Gulf and comparing that to what we saw last year and the year before in the Red Sea.
Alex, there's a lot of focus this morning on the Strait of Hormuz, understandably so, considering that more than a fifth of our oil supplies travels through that corridor. But more broadly in the region, how much are threats from potential Houthi attacks going to also stymie trade at a time where we are seeing rerouting already, even before the U.S. struck Iranian sites?
Yeah, I think there's a couple of things there. I mean, firstly, this is exactly what oil traders are trying to pass at the moment, right? It's, are we going to see a response that affects oil production? Are we going to see a response that affects shipping, say, through Hormuz or the wider region? Or are we going to see something more contained and keeping away from energy infrastructure? And I think price action this morning probably tells you that traders are leaning towards the idea, for the time being at least, that any response that impacts oil or shipping is going to be relatively limited. Now, whether that's a misplaced bet remains to be seen. The other question on the Houthis and how they can impact things, I think one of the things that goes under the radar slightly at the moment is diesel prices in Europe. They've absolutely soared in the last couple of weeks. We were talking this morning close to kind of $108, $109 a barrel equivalent of diesel. And part of the reason for that is lots of it flows through the Red Sea. And if these attacks resume, you're likely to see more having to go the long way around the southern tip of Africa. So there's an inflationary risk for Europe there at just the wrong moment.
Alex, appreciate the update from you, sir. Out of London, we'll catch up with Alex again later on this week. I hope at least. Alex Lumley there of Bloomberg out of the city of London. Crude at the moment positive by 0.7% on both WTI and on Brent crude. Dan Struyven of Goldman Sachs writing the following. A hypothetical sustained and very large disruption of energy supply transit would likely push oil and European natural gas prices above $110 per barrel. Joining us now is Dan Struyven at Goldman Sachs. Dan, that's the hypothetical. Let's talk about the base case. What is the base case for you and the team so far this morning?
Yeah, so base case remains that we don't see significant disruptions, neither of oil or natural gas in the Middle East. And in our base case, without disruptions, we actually have energy prices gradually declining, with Brent reaching around $60 per barrel in the fourth quarter of this year, and with TTF European natural gas prices also declining, especially next year, with the arrival of all these extra LNG supply cargo terminals.
Dan, how high could oil go if Iran does not close the Strait of Hormuz, but does other potential attacks on energy infrastructure or tankers that potentially disrupt the flow of energy coming out of the region?
Yeah, so oil prices could rise significantly in those scenarios, and the key reason is that the Middle East, the Gulf countries, are remain the largest regional producer in global oil markets. In general, our estimate is that for every 1 million barrels per day drop of supply that's sustained for about a year, Brent should be about $8 per barrel lower. That takes into account the fact that higher prices reduce demand somewhat and incentivize U.S. shale to produce more. I think one challenge, big picture, with potential supply disruptions in the Middle East is that the most important buffer that the oil market benefits from against supply disruptions, namely quite a bit of spare capacity among OPEC core producers, that's not necessarily available if the production to the capacity to produce would be affected by potential disruptions, because we think the bulk of the spare capacity in oil markets is concentrated both in Saudi Arabia and the UAE.
Are you seeing any reductions to Iranian barrels right now?
No, in fact, our nowcast of Iran crude supply is at a 3-year high, 3.6 million barrels per day of crude. Iranian supply has actually doubled over the last 3 years or so, and we're actually seeing very high export flows at the moment. I think the idea is to get the barrels out safely while we can, and at the moment prices are relatively attractive.
Given that, Dan, do you think that if there is some sort of calming down of the tensions, you could see a huge decline in oil prices?
Yes, so we estimate a geopolitical risk premium of around $10 per barrel. If the market were to increase its probability of our base case that you don't see disruptions, this risk premium could come down. It may take some time for us to really learn whether we're going to see disruptions. Now, I think the hypothetical scenario where this risk premium comes up the more quickly would be a successful return to the negotiation tables between the U.S. and Iran. But I think otherwise it would take some time for markets to get more confidence in the base case outlook for disruptions.
On the flip side, Dan, there's this question about how much the U.S. is going to be affected versus other countries or other regions. I'm thinking of Europe. I'm thinking of Asia. How big is the dispersion in terms of which areas would get disproportionately hit in terms of their energy costs based on a myriad of potential disruptions to oil supplies?
Yes, so I would rank the vulnerability of the three big regions as follows. Most vulnerable, Europe, both because of the exposure to oil prices, but also natural gas prices, but also diesel prices, where Europe no longer imports diesel products from Russia, but is heavily dependent on the Middle East. Second, I would put Asia. And then third, vulnerable, but the least vulnerable, is the US, because the US natural gas market is quite insulated from global markets. Because the U.S. is a large producer and because the U.S. Exports are basically at capacity. So if we were to see large disruptions, oil prices would also rise and increase costs for the U.S., but the U.S. would be the least vulnerable among the top three regions here.
Dan, I'd love to pick up your point about how Iran is at a 3-year high when it comes to their barrels that they're producing and exporting. At the same time, the Trump administration says they have maximum pressure right now on Iran's oil industry, and they're going after the teapots and the banks in Hong Kong and China that facilitate all of this. How are they so high if this administration says they're at max pressure?
Yeah, so to your point, about 90% of Iran's liquids exports, Iran is exporting just over 2 million barrels per day of liquids, about 90% goes to China. And I think over the last 2 years, the system has built out an alternative supply chain with shipping companies, with ports, with refiners, with alternative financial institutions that together ensure that these barrels continue to reach global markets, and in particular quite price sensitive Chinese teapot refiners, which have wafer-thin margins, and they basically need those discounts to continue operating.
Dan Struyven of Goldman Sachs. Dan, thank you, sir. As always, if you're just waking up to this, it's a calm, measured response in financial markets. We don't typically get to say that. Equity futures positive by a few tenths of 1%. Crude at the moment up by, let's call it 0.75%. And this quote from Peter Tchir of Academy. We've repeated this quote now a couple of times already, but worth going over again. The attacks help establish deterrence and peace through strength. There are risks of retaliatory attacks by Iran and disruption to flows of crude, but those risks seem low. And that's the conclusion of a lot of people so far this morning.
That actually, on some level, the fact that we haven't seen some sort of knee-jerk retaliation and the real kind of extreme option of blocking the Strait of Hormuz would undermine their economic prosperity to the degree that they won't do it. The goal here is to really understand, does this reshape things on a geopolitical scale? And this is something that Norman Roule was sort of hinting at in terms of China, in terms of Russia.
And then when it comes to actually the U.S. attack, if you look what's going on in financial markets, they are taking this as a W for the White House as an escalate to de-escalate situation. But we still should note, everyone is still waiting for Iran's response.
We'll keep tracking the moves for you. Equity futures just about positive on the S&P. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Arnold. Hey, Yahara.
Hi, John. China criticized the U.S. strike on Iran and said it's willing to join efforts to restore peace in the Middle East. The short statement from the foreign ministry said the U.S. move seriously violates the purposes and principles of the UN Charter and international law. China calls on all parties to the conflict, especially Israel, to cease fire as soon as possible. Meanwhile, Russia is showing no signs of winding down its war in Ukraine. The Ukrainian military's commander-in-chief says Russia still has almost 700,000 troops deployed and another 121,000 in strategic reserve. President Zelensky alleged Kyiv has evidence Moscow is preparing new military operations on European territory. And Tesla rolled out its long-awaited driverless taxis to a handful of riders. The first robo-taxi trips yesterday were limited to a narrow portion of Austin in Texas, with an employee in each vehicle keeping tabs on the operations. The car maker handpicked initial riders, which featured investors and social media influencers who live-streamed their trips. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the programme, a muted response.
Muted is the word with a capital M. Bonds flat, stocks flat to up, and the dollar a little bit weaker. There's always an element of geopolitical risk in the world. You just have to adapt to it.
Up next, McCormick of TD Securities, live from New York City. You're watching Bloomberg TV. Bloomberg's Javier Blas so far this morning writing this: not even a hint of disruption through the Strait of Hormuz. And right now you see that in the oil market. This move speaks to it. We're up by just 0.9% on Brent crude. WTI up by 0.91, 74.51 and 77.68 respectively. And with that move, this is what you see in the equity market. Not much at all. On the S&P 500, we're positive by 0.07%. Under surveillance this morning, a muted response.
I think muted is the word with a capital M. Bonds flat, stocks flat to up, and the dollar a little bit weaker. There's always an element of geopolitical risk in the world. You really can't go into the bunker and hide from it. You just have to adapt to it. I don't think you can get too caught up in the day-to-day volatility in times like this.
So here's the latest this morning. Investors fading risk of broader escalation in the Middle East. Mark McCormick of TD Securities writing the following: rising geopolitical pressure and higher oil could exacerbate inflation expectations and feed back into macro volatility. The result would look like a flight to safety for the US dollar, but in reality, it's a positioning squeeze. Mark joins us now for more. Mark, welcome to the program. Do you see anything in the events over the weekend that might upend the economic picture?
Well, yeah, I think what's important is the key term, I think, is actually complacent, right? So there's a ton of geopolitical uncertainty. There's also trade uncertainty. There's data uncertainty. So there's a lot of uncertainty, but there's absolutely no volatility. And I feel like we're kind of going through this same preparation that we were the week before Liberation Day, which was essentially the markets kind of got lulled into complacency. There was so much risk going on. They didn't know what to do with it. And as a result, they got sideswiped. So I think this is one of those moments where if you go back to last week, what happened is we had a ton of central banks in Europe that were dovish. We have these flaring geopolitical tensions. We've seen about a 35% rise in oil prices from the bottom. And I think the other thing is markets are a little bit they feel confident that inflation's moving in the right direction because it's been surprising on the downside. And these are all the things that build up complacency. And then once data comes in and we start to get more surprises, then this is what unlocks positioning. So I think this is the key word right now is complacency, because all the things that are happening are inflationary, not to mention the fact we have a NATO summit this week. We're going to see more fiscal spending. So we could basically get a revolt of data, term premium, and inflation all coming back at the same time where the markets aren't priced for this.
Are you suggesting the confidence around the inflation and the path of inflation, that particular story, Mark, are you suggesting that confidence is misplaced?
Absolutely. I feel, again, the market's been pulled into a direction where it feels like, even again, if you go back to the European central banks, the Norges Bank basically surprised with a dovish cut. Essentially, Sweden sounded very dovish. SNB is basically back to zero. Bank of England, again, dovish tilt. The Fed, it was a little bit more hawkish. You could debate whether or not they've tried to sound dovish and they're just tactically hawkish. But essentially, everything that's happening right now, and again, the NATO summit, what you're going to get is more fiscal spending. So again, we had a term premium shock. We've kind of moved away from that. But what I feel like what everyone's kind of dropping the ball on is this is continuing to be inflationary. The Fed basically raised their expectations for core PCE over 3% for this year. So again, another key part of this is just whether or not U.S. inflation has surprised on the downside for the last couple of months doesn't really tell us a lot where it's going for the next couple of months, because we still haven't seen the tariffs and the uncertainty and the actual data come through into the inflationary side of where this can go, at least for the in a tactical basis.
Mark, if you bleed this through the FX market, at what point are we underpricing the risk of inflation more greatly in Europe than, say, the United States? In other words, for the path of travel going forward, where do you see a renewed sense of inflation hitting the hardest?
Well, it's interesting in FX world right now, I feel like inflation changes the narrative. If you look at what's been driving FX, if you look at our portfolios and the factors we run, it's been value and momentum. So essentially value and momentum are short dollar. So if you're selling the dollar because you're raising hedges and essentially you're de-risking relative to the US, that trade's been working. So it's been piling on technical momentum. Where I think the break comes is that volatility basically disrupts positioning. And so our positioning and our sentiment indicators are extremely bearish on the dollar. And so where this can come through is in terms of trade shock. If you look at the weather, you look at the heat, you look at basically there's a very cold winter in Europe as well. The natural gas inventories are very low. So essentially, if we have continued elevation, especially right now, we're all going through a little bit of a heat wave, you can see the inflation coming through, and that would look like a negative growth shock, because what it looks like for the FX market is its terms of trade. So the exporters like the U.S. would do well. Canada might do relatively well. Mexico might do relatively well. But essentially where the shock comes through is Europe and Asia. So that's what the market's not positioned for. And again, this isn't going to change what could be a multi-quarter downtrend in the dollar. But what it does is it disrupts extremely long positioning in European currencies, in Asian currencies, in short positioning in the dollar. So that's where I'd want to look for this for at least the next 2 to 3 months.
If you carry through what you're talking about to the economics, you end up with the U.S. that is less vulnerable to the potential tax on consumers from higher oil prices than, say, Europe or even Asia. At what point is this longer than just a trade squeeze, a positioning squeeze, and really speaks to a disruption in the broader narrative that we've heard for the bulk of this year?
Well, this is where kind of some of the short-term uncertainty and tactical stuff kind of hits like a structural story, right? Because I think the key thing that matters in quarters, especially for the FX market, which can be very volatile day to day, is essentially the unwinding of U.S. exceptionalism. Like, it is very clear in the data that the U.S. economy is slowing. The problem is the rest of the world really isn't accelerating. So everyone's kind of like sluggish, but it's clear the U.S. has seen a bigger drop in data trends relative to the rest of the world. I think where this gets very complicated is the asset allocation and the structural flows that have come into the U.S., which has driven an elevated U.S. dollar and seen U.S. equities outperform. They're slowly going to start to reverse. If you start to think about who drives these types of flows over long-term periods of time, it's pension funds, sovereign wealth funds, real money. So again, whether or not hedge funds are tactically kind of trading a theme, it's very clear in the data there is a lot more downside for the dollar given a reallocation of investor pools, particularly from, if you look at places like in Asia where there's a ton of savings, if you look at other countries across Europe where there's tons of savings, if these pension funds, again, start to reallocate capital back into their home countries, this is what would drive the dollar a lot lower. So a lot of this will come together, slowing U.S. data, Fed cutting in 2026, essentially outperformance of other countries. Again, if we go to NATO, we're going to see further commitments this week for future spending. So as U.S. economy is slowing and there's more value outside the U.S., this is what's going to drive the dollar and the currency market structurally. What we're talking about right now for the next month or two is potentially a tactical reset on positioning rather than the longer-term fundamentals.
Mark, you keep bringing up NATO and potentially this 5% defense spending goal for all these members. I'm going to be traveling with the president to the summit. When it comes to inflation, though, and NATO, isn't this just a European problem?
No, I think part of it has to do we go back to term premium, right? If you think about what's driving bond markets, for a while it was the U.S. For the beginning of the year it was Germany. I say recently it's been Japan. JGB's been driving the term premium shock globally. So there's one thing that's happening is investors want to look at interest rate differentials and they want to look at this stuff as a driver for currencies. The problem is that there is a structural kind of embedded steepening happening across all curves because you need to separate the front end on the central banks versus the longer end, which is about fiscal and inflation. So I think when you come back to NATO, essentially when you look at the projections of budget deficits and you look at where all this is going, governments are now spending on things that they used to do that was somewhat in a cooperative nature. So if countries are now essentially raising fiscal stimulus, they're spending more money, they're running budget deficits, everyone's doing this at the same time when inflation's already above expectations. So the fiscal taps are broken. And I think what's important about the NATO summit is happening at the same time that oil prices are going up and everyone's been lulled into some complacency around inflation. So this is what brings term premium back.
Hey, Mark, we've got to run. It's good to hear from you. As always, Mark McCormick there of TD Securities. Up next, Peter Tchir of Academy, Stephen Cook of CFR, the former Defense Secretary Mark Esper, and George León of Rystad Energy. From New York, this is Bloomberg.
Markets are volatile. We're going to be in a very volatile situation.
There's a lot of liquidity still in the market.
Right now, we move towards mid-cycle. On balance, the economy is probably in mid-cycle.
To the market, what's most important is give us clarity.
We're in an environment where it's very easy to be bearish, and it's not that easy to be bullish.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Things are tense in the Middle East right now in financial markets. Things look pretty calm. From New York City this morning, good morning. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P coming off a three-day slide on the S&P 500, positive by not even 0.1%, just about unchanged across the board here. Likewise in the commodity markets, spike higher yesterday evening. and then we retrace some of that move. We're positive by just 1% on Brent crude. On WTI, up by 1.1%, 74.62. Some confidence here, Lisa, some confidence that maybe the escalation over the weekend won't disrupt the flow of energy on a broader basis.
It seems like people are writing off the prospect of closure of the Strait of Hormuz, which is sort of the big wild card that could potentially stymie about a fifth of all oil transport in the world. If you take a step beyond that, there is a question about what further types of retaliation there will be, because there will be retaliation. But ultimately, this is a market that has gotten burned by every time it has taken a geopolitical risk too seriously. And that is the reason why maybe people are really trying to look past it.
Is the operation complete? We're all familiar with the details over the weekend. Already this morning, getting details from Israeli strikes, which continue on one of those nuclear sites.
Absolutely. The IDF is coming out and they're saying that they are going after Fordo and obstruct the access routes to Fordo to this enrichment site in Iran. So basically, any concern that material was not hit by these bunker buster bombs from these B-2s flown over Natanz, Isfahan, and Fordo over the weekend, Israel is going in now. And remember, Israel has control of the skies right now, which is also why it's really incredibly challenging to see the Iranian response, because their chain of command has been completely disrupted, and the Ayatollah Ali Khamenei is basically right now hiding.
We're focused on, I think, two things through the rest of this morning. One, the early battle damage assessment, and two, the prospect of retaliation. And right now, we don't really have a decent sense of the retaliation.
Yeah, and this really is the key question. Do they go after some of the ships that we have seen going not only through the Strait of Hormuz, but just generally in the Persian Gulf with the Houthis potentially reigniting some attacks? Do they end up going after U.S. tourists or nationals or diplomats in other regions? These are some of the questions. Or do they hold tight, de-escalate, move their equipment elsewhere, and reignite their nuclear program while withdrawing from the IAEA? These are some of the things that potentially are on the table.
One thing that's incredibly challenging right now for Tehran is not only the fact that they are having a barrage of strikes every single day and that the top brass of the IRGC has been absolutely taken out, but also there has been complete decimation when it comes to some of their proxies in the region. Right now, there's control, basically, of the Israelis on Syrian airspace. You have Lebanese Hezbollah that doesn't want to get involved, Hamas that doesn't want to get involved. Potentially, the only one could be the Houthis. But what did we see just a few months ago from this administration? Attacks on Houthi military sites.
Brent crude this morning, 77.87, 74.70 on WTI. Coming up this hour, we'll catch up with Peter Tchir of Academy as Wall Street fades escalation risk. Stephen Cook of CFR on possible regime change in Iran. And the former Defense Secretary, Mark Esper, on the prospect of retaliation. We begin this hour with our top story. The world awaiting Iran's response after U.S. attacks on several nuclear sites. Iran saying the U.S. should expect, quote, severe consequences. Our team coverage starts right now with Bloomberg's Jemana Basechi in Dubai and Tyler Kendall out of Washington, D.C. Jemana, let's deal with that C word, confidence. Confidence that the flow of energy won't be disrupted. From your perspective, how misplaced is that confidence this morning?
I think people are hoping for the best and preparing for the worst. I wouldn't say that they're confident, because at this point, nobody really has real insight into what the supreme leader is thinking. As Annmarie was saying, he's been in hiding essentially since this war broke out. And ultimately, the decision does lie with him and the Supreme National Security Council. Yesterday, there were loads of reports suggesting that the Iranian parliament had approved that closure, but no final decision has been taken. And I think if you look at the raft of analysis that has come out as well in the last 24 hours, Iran would only go down that route if they really had their backs against the wall, and they would be willing to not just inflict damage on the global economy and shoot up oil prices, but also on themselves, because it's such an important passageway for the export of their own oil. And most of that, 90% of their oil exports, as your guest was just saying, go towards China. So if they go down that route, it would really be a question not just of how much of an impact it's going to have on the global economy, but the survival of the regime. It looks as though, if you look at the market reaction today, though, that the market is sort of squaring in on a calibrated response out of Iran vis-a-vis U.S., something similar to what they did back in 2020 after the killing of Qasem Soleimani, when they telegraphed to the U.S. that they were going to go after a military base in Iraq, and the U.S. were able to evacuate their personnel beforehand, so there were no fatalities recorded. That was the retaliation, and it was done at that point, so it was calibrated. If they want to go one step further, then of course it does bring up the question of whether they want to resuscitate the proxies in the region, whether the proxies in the region actually have the appetite and the capability to get involved. And then also beyond the Strait of Hormuz, they could look to attack specific military sites in the Gulf countries. As we've been talking about, many of these Gulf countries have been making a lot of progress in terms of restoring diplomatic ties with Iran over the last couple of years. Do they want to bring Gulf states into the fold as well? Probably not.
Tana, the Vice President J.D. Vance said we're not at war with Iran. We're at war with Iran's nuclear program. Is that a distinction with or without a difference?
Well, John, it has been interesting to see how U.S. officials have tried to make clear that the goal, the mission of this operation was to either impair, delay, or eliminate Iran's nuclear capabilities. But then we got this interesting post from President Trump yesterday on Truth Social where he mentioned the words regime change, saying that it's not politically correct to use that term, but if Iran isn't going to make Iran great again, in his words, then why wouldn't they call for regime change? Now, we should say, of course, this is a very nuanced conversation, but it's unclear the conditions or the circumstances that the U.S. really need to see to get behind this. So it is one of those factors that we are weighing here as we look into what is going to happen forward. Of course, the U.S. is preparing for any sort of retaliation moving forward here. As Jumana was saying, perhaps this could be a more targeted approach, but then that also raises the question about what a potential ceasefire would look like and whether or not the U.S. would get behind that, considering President Trump has called for what he says is unconditional surrender. But we've heard from Iranian officials that they're not going to come to the negotiating table unless the strikes against them stop. John, we have to keep in mind the backdrop here, which is that the White House has repeatedly said that it is taking proactive measures to protect U.S. troops in the region. But when we think that there are in excess of 40,000 U.S. troops stationed in the Middle East theater, that only raises the stakes of what we are discussing that much higher.
Tana Kendo, Jumana Basechi. Tana, Jumana, thank you. We'll catch up with you again in the next hour. Here's the view on Wall Street this morning. Tchir of Academy, cautiously optimistic, writing the attacks help establish deterrence and peace through strength. There are risks of retaliatory attacks by Iran, a disruption to oil flow, but those risks seem low. Pete joins us now for more. Pete, good morning.
Morning, John.
That line there, those risks seem low. The market appears to agree with you. Why do you believe the risks seem low?
So one, air superiority is clear, right? It's clear that Israel and the U.S. can kind of do what they want in the air there. Two, Iran may still have a lot of missiles, but their number of missile launchers has definitely been deteriorating. I think estimates were maybe they had 80 to 100. It could be as few as 20. So their ability to attack, and every time they shoot a missile, we are able to, or Israel's able to, identify the launch site and try and go after that. So I think they have limited ability and scope to do much. And regardless of whether the facilities were destroyed or not, we've certainly disrupted what they can do. Not only, right, do they have to, if the equipment was still there, move it around, see if it's still operational, what things have been going on, but clearly we're going to be watching this, and one strike is not necessarily over. So I think this peace through strength and deterrence, we've talked about it for a while. I think the U.S. lost some of that, and unfortunately, it is going to take some use of military might to reestablish that, right? You can have the tools and the capacities, but if you demonstrate that you're not willing to use it, no one cares. So we've now put something on the table that I think not just affects this, I think it's going to affect what China does in the globe, and certainly even Russia. Once we turn our attention back to Ukraine, Russia now sees a very different U.S., I think, than they saw Friday night.
Do you think so? I mean, there's another side of this, which is that some of the adversaries of the United States see this distraction as a distraction. There's a lot going on. There's a lot of agenda items that have to get done in the next couple of weeks. How do we know? How confident can you be from a market positioning standpoint that this truly is kind of power through strength?
You can't know, right? I think we've tried to establish deterrence. We'll see how they respond. I think we have more degree of comfort that Iran has limited capacity, and that's a big factor, right? As you've mentioned earlier, the proxies are very weak. The proxies aren't doing much. You haven't really mentioned it, but we assume that China is probably telling Iran, we really want to keep that oil flowing. So, it's not just the Iranian economy, it's the relationship with China going forward. So there's a lot of incentives for them not to do anything there. And we will see what happens with the IRGC in terms of the leadership's been decimated. When we look at the Iranian military, it tends to be very much like the Russian military, very hierarchical. So only certain people can do certain things. That's why their generals are so involved. So this has been a very big disruption to them. And I don't know what we mean exactly by regime change. Hopefully it would be something more internal, and you see another Arab Spring or some sort of internal uprising. But the IRGC is really the enforcer there. So depending on how badly they've been damaged, that could create some leeway and freedom there.
I'm glad you mentioned regime change because Secretary Hegseth and a number of other cabinet officials came out over the weekend and talked about this mission was not about regime change. And the president floated this idea last night. Do you think that is an actual goal of this White House?
I think there is a real hope that as the Iranian people, the 90 million Iranian people, many of whom have not been happy with their economic conditions, start saying maybe we can have the luxury of doing something, getting out on the streets, not being shot. There's a real risk, right? The IRGC is very brutal. I think that's what stopped things from the past. They're willing to shoot people. But I think the hope, and as we interpret it, that it would be something more domestically oriented, where the people in Iran say enough of this, right? Their economy should be at least as big as Turkey. They could be a top, 20, top 10 economy if they were organized and, more free. That has not happened under the, revolutionary regime.
Why do you believe there's reasons to be optimistic? It's the optimism in your note over the weekend that caught my eye. Not just the absence of pessimism, but the actual optimism. Why are there reasons to be optimistic this morning?
So, we can go back even to the U.S. and Iraq invasion, right? And one of the things the U.S. was trying to establish at that time was set up Iraq in such a way that when people go on Hajj, go on pilgrimages, they see a Middle East that's very different than what they see in Iran, right? They see much more openness. And to the extent you're in Saudi Arabia, any place like that, right? The Iranian people who travel abroad see a much more open society, something that's changing. Maybe that comes back. There are people there who remember. You go back and take a look at the pictures of Iran. It was a very cosmopolitan area. There's a lot of things going on. So I think it's that, upswelling where, okay, maybe this isn't what we need anymore. It is kind of insane that we call it revolutionary Iran. It's been revolutionary for 50 some odd years.
But does it concern you that optimism is reflected in what we're seeing this morning? That a lot of people are willing to shrug off the worst case scenario and say, more likely it's what you're saying, which has been so difficult to achieve in the past?
We always get slightly nervous when what looks like a contrarian view becomes consensus, but I think we're right here. I think there is time, and Iran would probably almost have to be some sort of last-ditch effort, something very aggressive. So I think we can push on this. I think Russia, is going to try and take advantage of some of the situation to establish as much progress in Ukraine as they can, right? Assuming if you're Putin and you're worried, okay, hey, once Trump gets this solved, maybe he's going to come back and revisit this. Well, you want to establish as much ground and capacity as you can. So I think Russia will make pushes, but they're going to focus on their own issues, right? They can't worry about what's going on in Iran right now.
We often stress this when you come on the program, just to remind everyone what's unique about your particular firm is that you pair all this military experience with a market call. What's the market call this morning off the conversations you've spoken to with all the generals over the weekend off the back of this event?
That I think Israel and us really have Iran back on their heels. They are not going to be very effective. They may try some things. We can push back. And Trump does distinguish very clearly between strikes and war. We may do more strikes if necessary. I think, right, this whole one and done is probably a bit exaggerated, right? If we see a need, we can launch something. I don't even know if it has to be anywhere near sophisticated, right? We launched an incredibly sophisticated attack, right? Really powerful weaponry. There was not a single shot done at us. So I think we have that ability. And domestically, I think what we're really hoping this is turning to, and we've been pushing from day one, and we were a little bit disappointed, I have to admit, when we went down this tariff bandwagon, but we've been really focused on national production for national security. And national, for us at least, meant some of our close allies. That seems to push away. But look what just went on with the China negotiations, right? It's all about rare earths and critical minerals. And we've got to make sure people are focused. It's on the processed and refined rare earths and critical minerals. The minerals and rare earths themselves are kind of everywhere. We have them. It's China controls about 90% of that processing. How we're not aggressively kind of building that out. And I think that's the next growth stage in the U.S. Enough with tariffs, enough trying to build that back. Let's make sure we process rare earths and critical minerals here.
Pete, it's good to see you, to catch up. A lot to catch up on. Peter Tchir there of Academy Securities. Equity futures right now just about unchanged on the S&P, briefly turning negative just moments ago. In the commodity market, crude positive by 1.25% on Brent crude. With an update on stories elsewhere this morning, with your Bloomberg brief, let's cross over to Yahara Hanand. Hey, Yahara.
Hi, John. Iran vowed retaliation against the U.S. following strikes on its nuclear facilities on Saturday evening. Israel's President Isaac Herzog said his country is not dragging America into a war. In an interview on CNN's State of the Union, Herzog said, "We are leaving the decision to the president of the U.S. and his team because it has to do with America's national security interest." Meanwhile, here, President Trump's one big, beautiful bill is nearing a crucial vote in the Senate this week. But the $4.2 trillion tax cut package doesn't have the support it needs yet to pass the Senate. Fiscal hawks seeking to lower the bill's total price tag are at odds with Republicans worried about Medicaid cuts and phasing out green energy incentives that support jobs in their states. And a check on Northern Trust shares. They are rising 5.5% in the pre-market. The Wall Street Journal is reporting Bank of New York Mellon approached Northern Trust last week, expressing interest in a possible merger. A tie-up would be significant. Northern Trust has a market cap of more than $21 billion, while BNY's tops $65 billion. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, defining the war.
We're not at war with Iran. We're at war with Iran's nuclear program. What we did is we destroyed the Iranian nuclear program. I think we set that program back substantially.
Up next on the program, Stephen Cook of CFR, live from New York City this morning. Good morning. Live from New York City, good morning and welcome to the program. Annmarie making some noise.
Sorry.
You done? Good. All right. Equity futures on the S&P just about negative by 0.1%. On the Nasdaq 100, we're down by 0.1%. Also, so far, pretty calm over the last few hours on this side of the world in equity markets. In the commodity market, crude positive by 1.5%. WTI just short of 75. Brent crude at 78.10, but well off session highs. We were positive by close to 5% on WTI. Just bear in mind where we've been, though. WTI crude in early May was trading in the 50s. Now it's in the mid-70s. It's a big change in the past few months. Under surveillance this morning, defining the war.
We're not at war with Iran. We're at war with Iran's nuclear program. And let me just say, Kristen, that we're incredibly grateful and proud of the American Air Force pilots who did an incredible job last night. The operation was really extraordinary. What we did is we destroyed the Iranian nuclear program. I think we set that program back substantially, and we did it without endangering the lives of the American pilots.
Here's the latest this morning. America attempting to distance itself from an all-out war, even as President Trump is floating the idea of regime change. Stephen Cook of CFR writing, if the Iranian regime remains intact and can muster a serious response, President Trump is likely in for a longer fight than he anticipates. Stephen joins us now for more. Stephen, welcome to the program. Let's just start with those words of the Vice President, J.D. Vance. We're not at war with Iran. We're at war with Iran's nuclear program. Is that a distinction without a difference?
It is. I think that the nuclear program is so closely associated with the regime, and it is actually the life's work of Ayatollah Ali Khamenei. It is the guarantee of regime security. So if you attack the nuclear program, you are essentially attacking the regime. I don't think that the United States is going to march an army into Iran. But I think that there is implicit in at least Israeli operations and what may be coming from the United States. A weakened regime is vulnerable to Iranians rising up and taking matters into their own hands. But when the vice president says we're not at war with the regime, or we're not at war with Iran, just Iran's nuclear program, he's being quite lawyerly about it. There really isn't a difference.
Stephen, are you seeing any evidence on the ground that there actually is a path to regime change?
No, so far there isn't. There were sporadic reports of during the height of the Israeli bombings last week that there were some people who were coming out into the streets and demanding an end to the regime. There's lots of anecdotal information coming out through social media and news reports from opposition networks. But the Iranian opposition is quite divided, and they haven't been able to bring themselves together in a coherent group to actually oppose the regime, besides the fact that the regime has been very, very strong. That is, I think, one of the underlying logics here of what the Israelis have done, which is to loosen the regime's grip on the Iranian people by bombing those state organizations that are responsible for maintaining control over order within the country, as well as hacking state TV and imploring Iranians to rise up against the regime. The United States has now essentially joined this fight. The nuclear program, as I said, is a critical component of the regime, a symbol of the regime's power. And so whether the vice president likes it or not, and now we have the president of the United States floating the idea of regime change, there is a possibility that the United States is backing itself into this policy.
At the same time, I was with the president in Riyadh last month, and he had this to say at a speech, and the interventionalists were intervening in complex societies that they did not even understand. He was basically calling for the end of so-called nation builders. How do you weigh these two ideas from the same individual in this White House?
Yes, I noticed the stunning distance he's gone from 3 weeks ago in Riyadh to his current policy. And I thought that the speech in Riyadh was a very, very good one. I think this underlines what's happening now. It underlines the fact that the president goes with his gut based on the situation. And I think that while it may have been a bold decision and the U.S. military may have undertaken this operation with, precision, and technological marvel, I worry that the president and the people around him aren't connecting the dots here and preparing for a longer fight that may be on their hands. We don't know, actually, what the capacity of the Iranians is to retaliate, though they did fire a barrage of ballistic missiles at Israel yesterday that injured 86 people. We do know that they have a global reach and that there are concerns about sleeper cells all over the world. So this is not, this is, I think, a larger undertaking than I think that the president relayed to the American people on Saturday night.
Does it surprise you, Stephen, that markets are so sanguine about this? Do you think that the risks are more pronounced than the people we've been talking to? We were just talking to Peter Tchir, who says right now this is peace through a powerful display, through force. Do you see it the same way?
Well, I do think that the United States has demonstrated an awesome force. What concerns me is that the Iranian regime, even through Israel's withering assaults over the course of the last 10 days, their demands with regard to the nuclear program remained exactly the same. This is a regime that doesn't look like it's going to give up so easily. So there will be retaliation. This may be drawn out longer. I think that we have to keep in mind a number of scenarios. Hopefully, we need to plan for the worst and hope for the best. I know that's a cliche, but cliches are true for a reason. So I wouldn't be so overly optimistic right now. We're just in the early going, and we're still waiting to hear from the Iranians.
We appreciate your perspective. Stephen Cook there of CFR. Just to build on some of that, for the Israelis, the operation isn't over. And for Stephen Cook, this is an ongoing story.
Yeah, and Israel is going to continue to perform different types of bombings within strategic sites. We saw that, Annmarie was mentioning this earlier with the Fordo site in particular. The key question here is also, does Iran really want to change? No. So how much are they going to take some of the supplies, go underground, out of the view of some of the IAEA, and really continue what they had started?
5 days ago, the Director General of the IAEA was on this program and said that they lost track and do not fully understand or know where the 400 kilograms of enriched uranium at 60%, which could be used to make 10 bombs, is. That was 5 days ago. That was before the United States decided to strike these 3 nuclear facilities.
We've got a lot to build on. Up next on the program, a must-watch conversation. The former Defense Secretary Mark Esper on Operation Midnight Hammer. Live from New York City. You're watching Bloomberg TV. A few minutes away from the opening bell, your scores are shaping up as follows on the S&P. Slightly negative, but no real drama here. At least stateside in the equity market, we're down by 1/10% on the S&P. Likewise on the Nasdaq 100. In the commodity market, Brent and WTI up by just 1 percentage point. 74.63. WTI, Brent crude 77.81. With some morning movers in the equity market, let's turn to Danny Berger. Hey, Danny.
Hey, John. Well, with that slight pop higher in oil, you are seeing energy stocks react. Again, much like the market itself, not a lot of drama. To your point, Occidental, Oxy up more than 2.3%. Some of the other movers around 2%. This has ebbed and flowed really this morning with traders trying to evaluate what the potential outcomes could be, what Iran's response could be, whether oil markets are impacted. Still a decent bid coming in. Elsewhere over the weekend, weekend, there was some Wall Street Journal deal news that last week BNY had approached, or at least the CEOs had a conversation with Northern Trust about potentially buying its smaller rival. Northern Trust apparently not interested in this. Still, BNY evaluating next steps, according to the Journal, including a formal bid for Northern Trust, so their shares up 4.4%. Finally, rounding things off, a little bit of sell-side action for you. Estée Lauder, those shares up 1.8%. This is thanks to an upgrade from Deutsche Bank from a hold to a buy, saying that the company is successfully diversifying away from just China, and that with more top-line growth, things like margins should start to improve from here, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, our top story, Iran vowing retaliation against the United States, saying America should expect, quote, severe consequences. Tehran yet to announce whether or how it might strike American targets across the Middle East.
And this really raises a question for the 40,000 troops that the United States has in the region within the reach of Iranian missiles that cannot reach Israel. They have huge stockpiles still of those types of ammunition. So a real question here of how they will choose to retaliate and whether this really is a one and done for the United States. How much does this put the emphasis on President Trump? How far is he willing to go if Iran retaliates in a provocative way?
But if Iran retaliates in a way where they did in 2020, potentially this does become a situation where this administration was able to escalate to de-escalate. When I say 2020, this was the drone strike on Qasem Soleimani, where in the back channels, the Iranians sent messages through the Swiss saying, we are going to have an attack in Baghdad, but then we are done after that. For our domestic audience, we have to see that we're responding, but we do not want a wider war.
Speaking of being provocative, this statement from the President of the United States, President Trump posting the following on social media. It's not politically correct to use the term regime change, but if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change?
And there was a collective palm to the forehead from a whole host of different Republican strategists who have been trying to make this seem really targeted and narrow in order to placate part of the Republican base that did not want to see foreign intervention and nation building like the president was talking about when you were following him in Riyadh. A real question here about how this is being perceived and whether the U.S. will be willing to continue with some of these strikes if there is some sort of retaliation that does seem escalatory, given some of the pushback in the own Republican Party.
The challenge with this statement is that it goes against exactly what his cabinet members, like Secretary of Defense Pete Hegseth, had to say yesterday. This was not about regime change. This is a precision strike. J.D. Vance, we are not at war with Iran. We are at war with Iran's nuclear program. Well, actually, when the president starts floating regime change, that has a different sense of what he's after. And I completely thought of his speech in Riyadh, where most people said this was transformational on U.S. foreign policy. And he says it's the interventionists that don't understand these communities and these countries that end up wrecking the world, and said that is not the administration he wants to conduct. And a month later, he's floating regime change.
A lot of change, that's for sure. We're tracking the disruption here at Bloomberg. Here's the latest on the airlines. BA, British Airways and Singapore Airlines cancelling flights to the Persian Gulf. Others like Japan Airlines and Air India planning to reroute flights around the airspace. Some BA flights scheduled for today are still operating.
Yeah, why would you want to fly a plane into an area where potentially there could be retaliation that no one can predict, right? I mean, we're talking not only about Iran, but Iranian proxies like the Houthis. And we've seen already air traffic redirected so that it doesn't hit the airspace in a number of different places. I just wonder how long this disruption goes on. How long can airlines really handle trying to make these moves?
Also last night, the State Department put out a worldwide caution alert for every American citizen that's traveling. And they say that there is the potential for demonstrations against U.S. citizens and interests. So they are advising U.S. citizens worldwide to exercise increased caution at this moment.
That's the latest on travel. Stunning events over the weekend. America's attack on Iran, years in the making. A stealth 36-hour-long operation named Midnight Hammer. Pilots dropped some of the largest bombs in their arsenal on Iranian nuclear facilities. Joining us now to discuss is the former U.S. Defense Secretary, Mark Esper. Mr. Secretary, welcome to the program, sir. We'd love to lean on your experience, the work to execute an operation like this one, and your early high-level assessment of its success.
Well, good morning. Look, it was clearly successful in terms of the execution. Our aircraft were able to make it in, drop, 14 GBU-57s. The submarines launched TLAMs from offshore. We were out with impunity. Nobody was hurt. And I think it speaks to the skill and professionalism of the United States military. And now I think what we have to do is two things. First of all, get a good battle damage assessment, and that will take a few days, and maybe even then will be incomplete until we get inspectors on the ground. And then secondly, we're all waiting to see what Iran's response will be. And there are various predictions. You guys have been talking about it, what they may or may not do, but that's what we're all waiting for now.
If you were advising the president right now, what would you say to him in terms of what to expect in terms of Tehran's retaliation?
Yeah, look, I think there are a range of things that they could do. They could, first of all, use Shia militia groups in Iraq to target our people and facilities there. Secondly, much like they did during my time in early 2020, they could launch a salvo of missiles against U.S. forces in the Middle East. And there are a couple dozen bases there with over 40,000 U.S. service members that they could go after. Third, there could be cells here in the United States and globally, or they can go against American officials as they did a couple years ago and try that. And then they could go after shipping in the Strait of Hormuz, which I think is unlikely. But to me, those are the range of outcomes that they may pursue here in the coming days.
In 2020, when Qasem Soleimani was struck with that drone strike, we did see retaliation, but it was telegraphed through back channels to the U.S. administration. Do you think we could see Iran take that same approach this time around?
Yeah, I think what they have to do is calibrate this so that they do enough for domestic consumption, feel like they've satisfied the military, that they've struck back, tell the Iranian people that they struck back, but not so much that President Trump really ups the ante, climbs that escalation ladder, and really hits them back fairly hard. Within hours of the missile strikes at El Asad, we had Iranians on the phone privately reaching out to us saying they were done, they had no more, they wanted to stop fighting, etc. And that was, of course, long before we knew that American service members suffer concussions and TBI. But nonetheless, they'll do a lot of back-channeling because they can't go much further. This is they're being dismantled. Their leadership, certainly the military side, is being taken apart. Their nuclear sites have been pummeled. And so the question is, how much longer can they go on?
How can they even decide on some sort of retaliation or strike against the United States if the supreme leader is reportedly hiding in a bunker, he's in his late 80s, and he has no access even to electronic communication?
Yeah, look, that's the big question is who's in charge? How complete, how effective is the chain of command right now? Are there instructions left behind to the IRGC or to the missile forces to launch attacks? That may explain why they haven't responded here in the 24, 36 hours since the U.S. strikes on Fordow, Natanz, and Esfahan.
There's one theory out there, Secretary, that this could potentially reignite some of the efforts that Iran has made to achieve nuclear status, because that is the only deterrence, and especially with the 400 kilograms of enriched uranium missing in action. How concerned are you about that reality going underground and really having the Iranian officials expedite those efforts?
Yeah, look, you bring up a good point that I was going to raise. There's still 900 pounds of 60% enriched uranium that's fairly close to what they would need for 10 nuclear weapons out there that we don't have control of. We don't know where it is. The IAEA doesn't know where it is. So first of all, we have to track that down. Secondly, we don't know to what degree the Iranian infrastructure has been destroyed. And even if it has, it's just a matter of time before they rebuild. Now, that at this point probably looks more like years than anything else, than months. But nonetheless, until there is a fundamental change in the ambitions of the regime or a fundamental change in the regime itself, this is likely an ambition that will grow back over time, arguably more energized than before because of what has happened here in the last couple weeks.
There's a larger point, Secretary, that other people have been making this morning, which is that it is a deterrent to, say, Russia, to China, showing what the U.S. military can do and is willing to do in the face of some sort of red line that gets crossed. Do you see it that way, or do you see other nations as seeing the need to become nuclear or having some sort of deterrent that really takes this potential outcome off the table?
You know, deterrence is based on two things, capability and will. And I think everybody has understood the United States military has the capability to do a lot of things. I don't think anybody ever doubted we could do what we did with regard to B-2 stealth bombers entering Iranian airspace and dropping these bunker busters. I think what is different here is President Trump has shown the willingness to do it, despite domestic voices coming from both the right and the left saying he shouldn't do it. So I think in this regard, it's more of his willingness to take action which probably caught Russia's and Beijing's attention.
Well, this was one criticism of the previous administration, as you know, Mr. Secretary, the failure to provide a satisfactory deterrence in key waterways in this region. And I'm thinking more of the Red Sea over the last few years. As we think about the Strait of Hormuz, can you just share with us what you learn about the best way to provide a deterrence and to prevent the disruption of those waterways?
Yeah, well, look, I think sending a clear message, first of all, is important. But secondly, and I say this in light of the fact that the Iranian parliament yesterday voted that Iran should close the Strait of Hormuz, I think there's going to be a good argument if they strike back to take out the Iranian Navy, particularly those elements of the Navy that could shut down or obstruct or hijack shipping in the Strait of Hormuz. So you could sink the mine layers of the Navy. You could go after the swarm boats that tend to come up upon cargo tankers and take them ashore. You could knock out Iranian missile batteries on the coastline. So I think, to me, that would be the top of my list if Iran tries to shut down the strait or takes more aggressive action, would be to take that card out of their hand, because everybody is concerned about shutting down the Strait of Hormuz. And yet, even though it would fly in the face of their own interests, they continue to threaten that.
Difficult to answer the next question, sir, but just a final question. Do you get the sense that American involvement in this operation is over, or do you think this might be ongoing?
I think it's to be determined based on how Iran responds. I think President Trump's instincts have long been, since the time I worked with him, he does not want to get involved in wars. He doesn't want this to go on and on and on. I think if Iran shoots missiles and they're largely feckless, I think we stand back. We probably continue to support the Israelis with munition and intelligence and defensive air defense capabilities. But I think in terms of continuing strikes, we probably step back at that time and then urge a negotiation. By the way, a negotiation between Iran and Israel that's going to have to include a return to the non-proliferation regime and inspectors and verification mechanisms on the ground in Iran. That's absolutely critical.
A deeply thoughtful conversation, sir, and we appreciate your time. The former US Defense Secretary, Mark Esper. Over the weekend, Secretary Rubio was interviewed, and he was asked about the prospect of the Strait of Hormuz being closed down. And he said that would be an escalation that required a response. The former Defense Secretary sharing with us just briefly there what that response might be.
Potentially sinking the Iranian Navy, and the United States could do it. We have one of the biggest U.S. air bases, military bases in Doha, and then in Bahrain, we have the Fifth Fleet of the U.S. Navy. That is something that we could potentially overwhelm the Iranian Navy with. Already, the president used the word "we" when he said have control of Iranians' airspace. What Rubio has said, as a number of people have said, is for Iran, this would be a suicide mission, because they need the Strait of Hormuz to get their barrels across. And the country that will likely tell them not to do that, of course, will be China and Xi Jinping.
If you're just joining us, welcome to the programme. Equity futures just moments ago turning just a little bit lower. But as we've said, repeated all morning, no real drama here, at least in the equity market. We're down by 0.2% on the S&P. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Yohara Anand. Hey, Yohara.
Hi, John. President Trump's One Big Beautiful Bill is nearing a crucial vote in the Senate this week. But the $4.2 trillion tax cut package doesn't yet have the support it needs to pass the Senate. Fiscal hawks seeking to lower the bill's price tag are at odds with Republicans worried about Medicaid cuts and phasing out green energy incentives that provide jobs in their states. Meanwhile, we are just one day away from the New York City mayoral contest. Former Governor Andrew Cuomo received a last-minute endorsement from President Bill Clinton, a move experts say could help turn out older voters. And Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg TV, also endorsed Cuomo. And the latest How to Train Your Dragon topped the North American box office for a second weekend, fending off the newly released horror movie 28 Years Later. That's according to ComScore. The animated film Elio had the lowest opening weekend ever for a Pixar film released in theaters. That's your Bloomberg Brief. John?
Yohara, thank you. More from Yohara in about 30 minutes from now. Up next on the programme, the Strait of Hormuz in focus.
The first people that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. The Chinese are going to pay a huge price, and every other country in the world is going to pay a huge price. We will too. It'll have some impact on us. It'll have a lot more impact on the rest of the world.
Up next on the programme, we'll be catching up with Jorge León of Rystad Energy, live from New York City. You're watching Bloomberg TV. The opening bell is about 1 hour and 42 minutes away. Going into that, equities down by 0.2% off the back of a 3-day slide on the benchmark here stateside. We're down 0.25% on the Nasdaq 100. In the commodity market, tracking crude for you throughout the whole of this morning, of course, 77.68 on Brent, up just 0.9% so far. Under surveillance this morning, the Strait of Hormuz in focus.
The first people that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. So they should be the first ones that are saying if they mine the Straits of Hormuz, the Chinese are going to pay a huge price. And every other country in the world is going to pay a huge price. We will too. It'll have some impact on us. It'll have a lot more impact on the rest of the world. A lot more impact on the rest of the world. It would be a suicidal move on their part.
So here's the latest this morning. Iran's parliament endorsing the closing of the Strait of Hormuz, a vital trade route through which over a fifth of the world's oil passes every single day. The ultimate decision to close the strait resting with the Ayatollah. Joining us now is Jorge León of Rystad Energy. Jorge, welcome to the programme, sir. Just the market more generally seems to be pricing in limited escalation risk, and I wonder what you're communicating to clients so far this morning.
Good morning, John. Thank you for having me. Indeed, it was a bit surprising at the beginning of the day that prices have not reacted as one would have imagined. And I think this is really driven by the significant degree of uncertainty that is that we're seeing. We're not really sure what is going to be the Iranian retaliatory measures. And this is going to be key to understand where this crisis is going forward.
Is the threat of closing the strait more useful to the regime than actually closing it?
I think that's a great point. I think the threat is quite important. I don't think from the geopolitical point of view, it will make sense for Iran to try to close the strait. As it was mentioned, 95% of Iranian crude is destined, it goes to China. So the last thing that the Iranian regime would want to do is upset the main trading partner. And also economically, it wouldn't make sense for Iran to try to close the Strait of Hormuz and therefore heavily affect their economic outlook.
How concerned are you about potentially not the closing of the strait, but Iran or its proxies like the Houthis attacking energy facilities and infrastructure like we saw in September of 2019 when they went after Saudi Aramco?
I think this is a real threat. Now, the world is very different now compared to 2019. The diplomatic relationship between Iran and the rest of the GCC countries has improved dramatically. So I think that is slightly less likely than what we saw than in 2019 because of that important element. But having said that, I think there's still a significant risk of Iranian retaliatory strikes against military assets of the U.S.
How much, Jorge, are we understanding the muted reaction today in a correct light? Is this because people are pricing out the chance of some sort of significant retaliation, or is it because of the glut of oil, the oversupplied nature right now of markets at a time when there's real question about just how much economic growth there could be?
I think it's a matter of a bit of both. On the supply side, yes, there's a lot of oil in the market. There's a lot of OPEC plus spare capacity also in the market. And let's not forget that OPEC plus is increasing production. So that's one element. On the supply side, yes, there's a lot. There's also headwinds from the macroeconomic point of view. So demand growth might be tilted toward the downside. That is one element. But I think it's also the fact that market and energy traders are still trying to understand what is the calculus here, what is going on, what could Iran do next, and that's where the market is trying to price itself in this very volatile situation. So my expectation is that unless we have clear indications from Iran, we're likely to see a lot of volatility in the market in the coming hours and days.
There's a question that Annmarie raised, which I think is a really important one, bombing assets that could come both from Iran, but also potentially from Israel. We've seen the willingness to bomb certain sites in Iran that do produce oil. How much do you see that as a risk that isn't being counted for?
I think that is also an important element. In the past round of the strikes, energy infrastructure has not been targeted. But this time around, as you might remember, last week there was some Israeli strikes on Iranian energy infrastructure. So that's also an important element. But from looking at the big picture, I think that the main risk is really the closure of the Strait of Hormuz. That is what really moves the market. And in the unlikely scenario that this happens, then we're really talking of a world where oil prices could rapidly spike, I would say, above $100 per barrel very easily.
Not seeing that right now. Jorge, We're tracking this. We continue to track this. Jorge León there of Rystad Energy. There seems to be a conclusion out there at the moment that a lot of the barrels going through this strait go to China, and that Iran isn't going to disrupt the flow of energy to China. That seems to be the conclusion from most people so far this morning.
Why would they annoy not only their biggest trading partner, but also all of their peers in the Middle East? Also, and this is something that Norman Roule raised that I think is really important, it wouldn't hurt Israel. And so if they really want to go after Israel, why would they take this particular approach?
This is why Rubio had called it, the Secretary of State had called this suicidal to their own economy. It's not going to hurt their adversary. Potentially it'll hurt everyone else in the world, given the United States, but it's going to hurt themselves. How are they going to export if they don't have the Strait of Hormuz? And then, of course, it's going to really irk the Chinese, which get these cheap barrels from Iran.
We've heard it a lot already so far this morning. Don't extrapolate out this comfort too far. We're still waiting for one thing, and it's an important thing. A response, retaliation from Iran.
We are waiting for this response when it comes to this retaliation from Iran, and potentially will be like in 2020, and they will give notice to the United States of what it's going to be, and then it has this feeling of one and done. But right now, the Ayatollah is in hiding, and he would be the one that has to give the go-ahead on what the retaliation is going to be. And there'll be a menu of options, from retaliation on U.S. bases in the region, or potentially something like cyber attacks. There's going to be a whole host of potential options.
Just to respond to that, how orchestrated would it be this time around? And yes, reflecting on the experience of, say, 5 years ago, that was tremendously orchestrated. Is this time different?
Well, it depends how much the Iranians want to signal that they're willing to go at this in a more protracted way, and that they're willing to continue having this tit for tat, or further be willing to bring the United States into the fold, because right now they are every day at war with Israel. We should also note, when it comes to what is going on right now in Iran, the chain of command. No one really knows where this potentially can come from, because the IRGC's top brass has been decimated.
There's also the issue of President Trump. We know he was willing to do one particular targeted strike. Is this administration willing to go further, to actually take additional strikes at a time where it really is splitting some of his base, some of President Trump's base? And that, I think, is something else that people have been talking about. If he's not willing to go to regime change, how far is President Trump willing to go?
So far this morning, we're fading escalation risk. You see that in the oil market, positive by just 0.75% on both Brent and on WTI. You see it in the equity market, just a touch as well. Equity futures only down by 0.1%. Up next on the programme, the third hour of Bloomberg Surveillance is just around the corner. We'll catch up with Venu Krishna of Barclays, the Israeli ambassador to the UN, Danon, Veronica Clark of Citi, and Mike Contopoulos of Richard Bernstein Advisors. We've got through about 2 hours of this programme and haven't mentioned the Federal Reserve once. Has the Fed come up once?
No, and probably for good reasons, because last week you didn't miss much.
We get a sprinkle of the FOMC in the next hour of Bloomberg Surveillance from New York City. This is Bloomberg.
The situation with Iran is going to be with us for a little while.
President Trump, Israel are all stepping into a massive realm of uncertainty.
Higher oil prices as being more of a tax on the consumer and a headwind to growth.
What we are really focused on is the path that this conflict takes.
Diplomacy is the key here.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
90 minutes away from the opening bell, and we are fading escalation risk this morning. Good morning to you. Your scores look like this. Equity futures on the S&P barely negative, down by not even 0.1% on the benchmark stateside. Similar move on the Nasdaq 100. In the commodity market, briefly overnight a spike. We fade that as well. Positive by just 0.6% on Brent crude. WTI here, Bramo, 74.34.
Traders are exhausted. Right now, you can feel that. There has been a number of existential threats that have come up pretty much on a weekly or daily basis, depending on your time horizon. And pretty much every time when people sell, they get burned on the other side. So it seems like there is a feeling right now, why price in the worst case scenario? Why even more heavily weight that when you can make all of these rosier scenarios that leave you in a place that looks very similar to where we were last week?
Annmarie has talked about this repeatedly. Focus on the chain of command in Iran, or lack thereof. When you think about retaliation, Who is in position right now to make that decision?
Well, it would be the Ayatollah, but at the moment he's in hiding. It doesn't seem like he has access, or he's staying away from electronic communications. Obviously, this is being surveilled. This is a very old individual. He's in his late 80s. And we've been talking about this idea of potentially the disruption of closing the Strait of Hormuz could be, and how Iran's parliament voted to do this. But explicitly for this to happen, the Ayatollah would have to give the final call. And right now, the Ayatollah is missing in action.
As the week progresses, we've got to think about other things. Tomorrow, the Fed Chair Jay Powell kicks off his semi-annual testimony. Right now, the 2-year is down about 2 basis points, around 390, anchored around this view of a Fed that's going to do nothing anytime soon, or do something maybe in several months' time in September. And for me, this Federal Reserve, things get harder and harder, because at the same time we're talking about inflation risk, we're also talking about a growth profile that is deteriorating. How is the Fed going to get in position to respond to that?
And really what we're talking about this morning, the potential rearranging of the Middle East, affects that. It is yet another unknown, the idea of oil prices and how they filter into inflation. This comes before core PCE, which we get on Thursday, as well as personal income and spending, the dual mandate, increasingly under pressure as they head into the rest of the year. And Chris Waller, Fed governor, throwing some sand in the gears late last week, coming out and saying, really, this is a Fed that could move as soon as July. Maybe he is auditioning. Either way, there are a number of people in markets that think the same thing because of what you just said, the growth aspect that does seem to be slowing.
This has been buried by the news flow over the weekend. I get that. I understand that. But at the same time, the president was also posting on social media, just flirting with the idea of, I'm not going to say he's looking at firing Kim. He's not looking at firing Kim. But when you throw out words like firing Kim, they're provocative statements.
Right, and he continues to do this. He continues to jawbone this idea, and then he wants a new head of the Fed. But the fact of the matter is, Jay Powell has less than a year left. And already we've seen this administration start to think about potentially just thoughts right now of who is going to fill that position. And then Scott Bessent said to me just a few months ago, the Treasury Secretary, that these interviews will start in the fall. So potentially we could have a shadow Fed chair before the new year is up.
Yields down by a basis point or so at the front end, down about 2 basis points on 10s to 4.36. Coming up this hour, we'll catch up with Venu Krishna of Barclays with global markets on edge, the Israeli ambassador to the UN, Danon, on what's next in the Middle East, and Veronica Clark of Citi on the way for a dovish pivot from the Federal Reserve. We begin this hour with our top story. All eyes on the Middle East as Iran vows retaliation. Our team coverage starts right now with Bloomberg's Jemana Basechi in Dubai and Tyler Kendall at the White House. Jemana, I want to build on the conversation you've been having, that Annmarie's been having, the chain of command. When we think about retaliation, who is in position right now to make that decision?
Well, ultimately, it would still be the Ayatollah and that Supreme Council. Unclear where the Ayatollah is right now. He was last seen at a televised address last week before the U.S. strikes took place, but nothing since then. So in all likelihood, they are probably trying to, in whatever format, come together and build out a plan. Remember, in response to the Qasem Soleimani killing in 2020, it took them at least 5-6 days to build a response around it. But I would say right now, the region is focused on 3 questions. Number one, how much damage was actually sustained at those nuclear sites from the attacks over the weekend? It's going to probably take a couple of days, if not weeks, to assess how fatal that blow was. Number 2, whether Iran actually still has the capability to go ahead and build a nuclear weapon, even though they have sustained a lot of damage at those sites. And number 3, do they want to risk a response to the U.S. that might actually force further U.S. military intervention, knowing that their own defense capabilities have been severely damaged, their air defense system has been completely obliterated, their long-range ballistic missiles taken a big setback as well, and their proxies in the region are nowhere to be seen. So all of these are questions that the Iranian leadership has to grapple with. And at this point in time, they're probably focused on regime survival as opposed to coming out on the offensive.
Well, I think that introduces the 4th question. Tyler, what is the ultimate goal of the U.S. and this administration? And did the president blur the lines overnight?
Yeah, hey, John. Well, that is the biggest question here going forward, considering that we saw from that post on Truth Social, President Trump suggesting the words regime change, saying that it's not politically correct to use that term, but that if Iran isn't willing to make Iran great again, then why wouldn't they call for regime change here. Now, U.S. officials have gone to lengths to say that that is not the goal of this operation, but instead it really was towards dismantling or ending Iran's nuclear program. But as Stephen Cook told you on this program earlier, essentially the regime's nuclear ambitions is just so closely intertwined with Iran's supreme leader's ultimate goals. So perhaps there isn't as big a distinction moving forward as we look at this. Now, of course, the big question here is what is that Iranian retaliation going to look like? The White House has made clear that it has already taken protective measures to protect U.S. troops in the region as they watch this closely. John, we could get some sort of update later on today. President Trump is set to convene his National Security Council at 1 p.m. Eastern.
Tana Kendall, Jumana Basechi. Tana, Jumana, thanks for the coverage this morning and throughout the last few days. To the both of them, thank you. For the View on Wall Street this morning, joining us now is Venu Krishna of Barclays. Venu, good morning to you, sir. It's good to have you in the studio.
Good morning.
The Teflon S&P 500, shaking off trade wars and actual wars. Does that all make sense to you?
Yeah, it does. I think our view is that it's going to be choppy. We are pretty close to what our price target is, which is 6,050. But I think we are looking past this year. What we are seeing is, next year it's going to normalize. Growth is going to improve versus this year. We're going to be in a monetary easing cycle compared to this year. And inflation probably is also going to start moving in the right direction, even if it remains sticky for a longer while, right? So all that means that earnings are actually going to accelerate 9% as per our estimates. And that is a pretty good state of world to land in for the equity markets. And in fact, if you believe in that world, then we think S&P ends at 6,700 by the end of next year.
If you believe in that world is kind of key.
Absolutely.
And this question at this moment is how much can you price out the potential for some sort of oil shock, some sort of inflationary shock based on the fact that you've got ships making U-turns and then U-turning again to go through the strait. That's all expensive when it comes to oil, when it comes to overtime, when it comes to personnel, insurance. How much are we really understanding what the inflationary risks are?
That's an excellent question. I don't think we have fully contemplated that, right? Because the historical experience thus far has been that especially geopolitical risks have managed to be contained every time. And the market is become accustomed to that, and hence we are extrapolating that once again.
This is important. The Pavlovian response of markets. They have been trained to look past every once-in-a-lifetime headline that they get every single day.
Absolutely.
At what point does this make a market unable to respond to something that's real?
The unfortunate thing I feel is that the market will respond when the circumstances change, either for the better or for the worse. And what you're alluding to is, can things go worse? Of course they can. To what extent does U.S. get dragged into this confrontation? To what extent does Iran step back from retaliating? And to your point, so far, oil infrastructure has not been targeted either by Israel or Iran itself has not moved aggressively on the Hormuz Strait, for example. So I think all those things are still unknown, and it will be foolish to claim that we have a sense that it's not going to happen. So I think your point is well taken, and inflation in that case does remain a significant risk, which means it'll percolate into the Fed policy, into our economic growth, into global growth for that matter, everything. So yeah, I think we are at a very critical point right now, but the base view is that it is going to be contained. And for that to be contained, all parties have to be restrained in how they behave.
How do you predict and analyze what this administration is going to do? Because we saw with Liberation Day, the president made a 180 and pulled back from the brink and the most aggressive policies on tariffs. But when it came to striking Iran, he went through with it.
I think the market has no idea. I think the general sense is that most people around the president are also not as, should I say,
strategic uncertainty.
Yeah. So, but that is the style of operation the market has got used to. But I think the good news is on tariffs, for example, what the market has realized is that the extreme rhetoric on tariffs is indeed a negotiating tactic. It doesn't mean we're not going to have tariffs. We are going to have tariffs. The only debate right now is what's the magnitude and what's the direction and what are the impacted regions in the world. I think a similar situation. I think in this case, you could argue that the U.S. had to act, given the enormity of what is happening in the Middle East. And so I'm not too sure that the more recent action is a big divergence from what the strategic objective of the U.S. is for the safety of the world.
Venu, just to build on Lisa's line of questioning, the conditioning of investors, I think it's important to go over all of this. This really started GFC. We've been conditioned, trained to buy on weakness to such an extent that people don't even sell anymore on events like the one over the weekend. Now, I think there is a slight pushback, and this is the following, that perhaps this time around the Federal Reserve might not be in a position to respond to weakness. How constrained is the Fed put? And if it is constrained, how difficult is it to make the argument that stocks keep going up and to the right if the labour market starts to crack?
If the labour market cracks, the question is what is the extent of that cracking, right? And so if it falls apart sharply, then the equity market is going to be in trouble because then economic growth is going to be negatively impacted. But we do feel, our house view is that the Fed is not going to cut till the end of the year, and you're going to have perhaps a couple of cuts next year. But I would say that if you take a step back, the equity market has thus far dealt with relatively higher rates quite reasonably, right? And companies have also managed around that. So, and if you take a step back and say prior to COVID, if you looked at the 30-year history, we had much higher rates for a very long period of time. It's just that we got used to, post-GFC, a 15-year period of unusually low interest rates, which was not the ideal environment in itself.
But Venu, there's an important distinction. Allow me to jump in. There's an important distinction here. Can the economy live with 5% interest rates? Can the market live with 5% interest rates? Based on the experience of the last few years, sure. Can the economy and the market live with 5% interest rates if the unemployment rate starts to go higher? I think that's a very different question, isn't it?
Absolutely.
Unemployment at 4% and rates around 4%, you can sit here and say equity market's going to be okay. Can you say the same thing if unemployment starts to climb towards 5 and the Fed funds is still close to 4 because they can't cut? That's a different world, isn't it?
Absolutely. That's a difficult combination. In fact, our house view is that unemployment is going to peak at 4.5%. So in the scenario you're painting, where rates are relatively higher and unemployment is breaching the 5% level, then we have a problem. Then this market is not going to sustain the current levels, and we'll be having a totally different discussion altogether.
Let's hope we can avoid that problem. Venu, it's great to catch up, sir, as always. Venu Krishna of Barclays, the likes of Neil Dutta, Lisa, as you know, you covered it all last week. Very, very loud, speaking very, very aggressively about what this Fed needs to do in response to these cracks starting to emerge in the labour market.
Cut rates again. And guess what? Chris Waller's correct. And there are a lot of people in markets who agree. The problem is you have seen resilience in the underlying data. Does the inflation data give them the green light? And that's the reason why PCE is going to be really interesting on Thursday.
The Fed Chair Jay Powell's semi-annual testimony kicking off tomorrow. Look out for that. Equity so far just about unchanged on the S&P, with an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Arnott. Hey, Yahara.
Hi, John. In a post on Truth Social, President Trump floated regime change in Iran, writing, quote, "If the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change?" This comes after his top national security officials insisted the U.S. did not want to bring about the end of Iran's government, only an end to its nuclear program. Meanwhile, China criticized the U.S. strike on Iran and said it's willing to join efforts to restore peace in the Middle East. A short statement from the foreign ministry said the U.S. move seriously violates the purposes and principles of the UN Charter and international law. China calls on all parties to the conflict, especially Israel, to cease fire as soon as possible. And Tesla rolled out its long-awaited driverless taxis to a handful of riders yesterday in Austin, Texas. The first robo-taxi trips were limited to a narrow portion of the city with an employee in each vehicle keeping tabs on the operations. The car maker handpicked initial riders, which featured investors and social media influencers who live-streamed their trips. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next, the morning calls, plus the Israeli ambassador to the UN, Danon. That conversation just around the corner. Live from New York City. Good morning.
Thank you so much.
Live from New York City, the opening bell just around the corner, 1 hour and about 12 minutes away. Your scores look like this. Equity futures fading just a touch, totally unchanged on the S&P 500. On the Nasdaq, just turning just about positive. This is where we've sat through the New York session so far. So far this morning, basically unchanged across the board. That's the price action, not much of it. Let's get you some morning calls. First up, UPS raising its price target on Tesla to $215, saying the robotaxi is already priced into the stock. That stock is higher by 1.1%. Your second call from Goldman, initiating coverage of Tyson Foods with a buy rating, citing strength in its diverse offerings. We're positive there by 0.6%. And your third and final call, Medius upgrading AMD to buy, predicting AI inferencing will be much bigger than expected. That stock so far this morning higher by about 1.3%. That's some of the price action and your morning calls. Let's turn back to our top story. The world bracing for Iran's response after the US attacked its nuclear sites over the weekend. Joining us now is Danon, the Israeli ambassador to the United Nations. Ambassador, good morning, sir. It's good to see you.
Good morning. Thank you for having me.
Let's talk about the events over the weekend. And let's talk about this also. Who's in charge in Iran right now? Annmarie's been talking about this all morning, the chain of command. Who's in charge?
Well, it's hard to tell. You know, they have the regime, which still has control over the population. But you see statements coming out. The Minister of Foreign Affairs is flying all over, sending threats to Israel, to the US. I don't think that Iran today is in a position to threaten anyone. They should think very carefully about the next steps, what they want to do, what they should do. You know, our position was very clear that we had the goal in this operation to degrade their capabilities. I think we achieved a lot so far. We still have more targets, but I think when you look at Iran today and you compare it to the last time I was here a week ago, it's a different ballgame. They don't have those capabilities over the reactors, and I think we were able to push back, significantly Iran more than expected.
You were here just a little over a week ago, the morning after those first Israeli strikes started, and you said it would take days or weeks, this operation. We heard from the Prime Minister today, Benjamin Netanyahu, and he said they're very close to completing the goal of eliminating the dual threats, ballistic missiles and nuclear capabilities. Where are we on the timeline?
So I cannot give you exact dates, but I think, the main challenges we had, which were the nuclear reactors, the result of the U.S. attack are magnificent. The U.S. had the capabilities that we don't have. So on that issue, I can tell you that we achieved most of what we wanted. But still, you have the ballistic missiles, which is a major threat to Israel. It's important to know that we all speak about the nuclear threat. But when you have 1,000 ballistic missiles targeting Israel, it's a problem. So we took a lot of those launchers, but we still have more to go.
When it comes to nuclear facilities, though, this morning, the IDF said that they went after Fordo entrances and exits to make sure they were preventing the removal of these materials. How do you assess what Iran has right now in terms of their nuclear capabilities?
Well, Iran is a big country, and they were hiding a lot of the materials, and they were trying to move stuff. So we cannot guarantee the result. But when you look at the infrastructure, at the machine of terror that they built, and by the way, they spent hundreds of billions over the years, now it's not there. So we cannot guarantee 100% result, but we can tell they don't have those reactors. It will take them decades to rebuild it.
There is a question about how much regime change is part of what Israel is trying to do. We've heard President Trump discuss that as well. What's your sense of how much that's also one of the aims?
Well, I can tell you feelings. We all wish that there would be a regime change. For the people of Iran, they're victims of this regime, so we pray for that. But the question if it's the goal of the operation, I think, it's not our goal, and we heard President Trump also. It's very hard to tell the people of Iran what's good for them. They should decide, and I hope that they will take the right decision. They deserve better.
You're the ambassador to the United Nations. Earlier this year, Israel withdrew from the UN Human Rights Council following the U.S. in doing that. What role does the United Nations have to play in some of these negotiations at a time where people are wondering about its institutional relevance?
Well, I agree with you that they should think carefully. Yesterday, there was an emergency session of the Security Council, and some countries condemned the U.S. And I told them, where were you? All those years when they enriched the uranium, when they built the reactors, now you come and you condemn Israel and the U.S. So the UN should be much more effective. And basically, they allowed Iran to do what they did all those years. And I still believe in the UN, but I think the UN should be reformed. We expect the new U.S. ambassador to arrive soon, And I think that together we can change what's happening there.
There's a line that you used earlier in the conversation. You reflected on the US capabilities, and you said that the US has capabilities that we don't have. And it raises a question that I think makes some people in this country uncomfortable. Did Israel start an operation knowing that they wouldn't be able to complete it without US involvement?
No, absolutely not. And I said it, I think, last time I was here. We have the capabilities. It will take longer. It will be more painful, but we can deal with the threats. So I think what the decision of the US was the right decision, because now it will be a shorter war, and I think it's much more effective.
How are you preparing for the retaliation?
So first we have to acknowledge it's not easy for us. The entire country is not functioning today. People are not going to work. People stay next to the shelters. You talk about 9.5 million people for almost 2 weeks. It's heavy, but we are willing to continue as long as it takes. But we believe that as I said earlier, we achieved most of the goals. Now we have a few more things we want to take care of. And now
what are those few more things?
Mainly the ballistic missiles. The industry, they built a huge infrastructure to produce ballistic missiles. They wanted to compete with the US and Russia, and they were very close to get there. So we want to make sure that it will be very hard for them to rebuild those capabilities.
These kind of ballistic missiles coming from Iran and their nuclear program, this is the point of the regime. Can you decimate their ballistic missile program, their nuclear program, without decimating the regime?
Well, we hope that they will not have the desire after what happened in the last 2 weeks, that they will understand that we will be there. If they will continue with the aspirations to eliminate Israel, Israel will be there before they attack us. We learned the lessons after October 7th. We are not taking any chances.
Ambassador, we appreciate your time once again. Thank you for being here. The Israeli ambassador to the UN there, Danon. A lot of questions still unanswered about the status of some of those materials that you've been reflecting on over the past few days.
Absolutely. And this is why it was so interesting when this morning the IDF came out and talked about that they are bombing the access road leading to the site of entrances and exits when it comes to Fordo, because they are concerned about some of this nuclear material leaving Fordo that potentially these buster bombers did not actually get over the weekend.
As the week grows older, the attention of this market will shift towards the Federal Reserve once again. The Fed Chair Jay Powell delivers his semi-annual testimony in the House Financial Services Committee tomorrow. In just a moment, we'll catch up with Veronica Clark of Citi, who says the Fed's dovish pivot is still ahead. Just ahead, the opening bell, 1 hour and 4 minutes away. Equity futures totally unchanged on the S&P 500 as the commodity market doesn't blink, just sits there. Unchanged. Crude right now, WTI and Brent positive by just 0.1% on Brent crude at 77.11, 73.92 on WTI. Three-day losing streak on the S&P 500 through Friday, coming into Monday. That's the longest daily streak of the month so far. Equity futures at the moment just about unchanged on the S&P. Similar move on the Nasdaq. In the bond market, anchored around this do-nothing posture over at the Federal Reserve. The 2-year basically unchanged, down 2 basis points, 388.65, and also unexpectedly unchanged in the commodity market. Crude not doing much at all. WTI and Brent Brent crude going nowhere, 76.96. WTI down by 0.2% at 73.59, coming off the back of 3 weeks of gains, mind you. And bear also this in mind, that a few months ago, not even in early May, we were trading in the mid-50s. So we've seen a big change in the past 6 to 8 weeks, 73.65 on WTI. Busy week ahead, including 2 days of Fed Chair Jay Powell testimony on Capitol Hill. Bloomberg's Mike McKee joins us now for a sneak peek of what we can expect. Good morning, Mike.
Good morning, John. Well, of course, Jay Powell's been in Donald Trump's crosshairs since Trump came back to office, basically because the president wants lower interest rates. This week, Jay Powell gets a chance to explain why he's not getting them right now. And that is very much explained by the oil prices you were just talking about, John, because the Fed doesn't want to get ahead of what might happen to the economy. And he'll explain that on Tuesday and Wednesday before the House and Senate. We also have a lot of other Fed speak this week. Bowman and Goolsbee today, Williams and Hammack on Tuesday, along with Powell. Kashkari and Schmid, it's a busy week ahead. We do have a couple of important economic indicators. One would be the Conference Board Consumer Confidence number tomorrow, but that was finished, that survey, before the Iran strike, so it may not tell us a whole lot. Friday, we do get the University of Michigan sentiment, and people will be watching that to see whether there's been any effect from the strike and from the inflation expectations. But also Friday, the biggest number of the week, personal spending and PCE inflation. What we have seen is inflation coming down just above the Fed's target on the headline, but with some base effects jumping up again expected for the month of May. We shall see if that is indeed the case. Also watching personal spending. Do Americans keep spending or have they backed off? A lot of that will go into questions that will be asked of Mr. Powell on Tuesday and Wednesday. And we'll see. I assume he's going to be more polite than the president, but I assume he gets the chance to defend what the Fed is thinking at the moment.
And Michael McKee, let's talk about whether we should take the summer off or not. Steve Englander says maybe we should. And then Governor Waller spoke and said that maybe we could act as soon as July. How much does that introduce some uncertainty to the equation in the next couple of meetings?
I don't think it induces as much uncertainty as people think, because basically he was asked, what about July? Could you do it in July? And his answer was, well, I don't think the rest of the committee is going to go along, but if the data fell the way we want them to, then possibly we could. It was very hedged. I don't think he really means July is on the table. And of course, we have heard from him before when he spoke with us a month or so ago. He said he didn't think it would be until late August, early September before we'd have enough information for them to make a move. So I don't think you have to worry about that. I would say June, July, August off the table while we wait for data.
Mike McKee, thank you, sir. Looking forward to your coverage. Here's a take from Veronica Clark of Citi. She says the following: as inflation aside from goods slows and the unemployment rate rises, we expect a dovish pivot from Powell in July or September, with a base case for 25 basis point rate cuts resuming in September. Veronica joins us now for more. Veronica, good morning.
Good morning.
Good to see you.
Thanks.
What's going to drive that dovish pivot? What do you see in the data so far?
Yeah, I think it first has to come from the labor market. I think we need to see the unemployment rate rising, maybe payroll job growth slowing. I think we can see that, especially before September. We'll get 3 months of data over the summer. We already see continuing jobless claims rising. In the past, last year, that's been a really good indicator for the unemployment rate rising. So I think that's first and foremost. But then, yeah, we need to see in the inflation data that it doesn't look like the tariff inflation is becoming widespread or persistent. And I think they'll have evidence of that by September, too.
The chairman himself has acknowledged the labour market is no longer a risk, a source of inflation. So
yeah.
What's he worried about?
Yeah, absolutely. I mean, maybe, high inflation expectations, but it is a very different labor market demand backdrop than the type of backdrop that we had post-pandemic that led to the more persistent inflation. That was a very strong demand backdrop. Labor markets were tight, wages were rising. We definitely don't see that now.
There is an issue of supply shocks as well as potentially some sort of geopolitical shock, like the one that we've just been seeing, that could drive oil prices higher and lead to some sort of stagflation type activity. Why do you rule that out as a likely outcome that could potentially tie the hands of the Federal Reserve?
Yeah, I mean, we don't know, of course, so we'll see what the data look like. But it comes back to that demand backdrop that this doesn't look like a labor market or a consumer that will allow, even higher oil prices to become something broader. Back in the pandemic, we saw home prices rising, we saw wages rising. We actually see home prices falling now. That looks like a very different story. So we might see some data that look like a stagflationary environment, but I don't think it's going to be true stagflation.
Nathan Sheets, who I know you know, of Citigroup, of your bank, put out a global economic outlook over the past couple of days. And in it, he talks about the likelihood that there would be some sort of deceleration of growth. But he added this, and I thought this was important, that the resilience of global activity and limited pass-through of tariffs to date highlights the risk that we are overestimating the disruptive effects of tariffs and some of these other potential shocks. How much have you rethought some of your thesis toward this deterioration of growth based on the economic data, based on earnings, based on even commentary that we're hearing from CEOs?
Yeah, I mean, We need to see, obviously, how the data evolve in the next couple months. But Chair Powell even last week was saying that someone has to pay for the tariffs, right? So we haven't seen it in the price data yet. So it doesn't look like consumers are paying for it yet. Maybe exporters are paying for it. But maybe it's getting absorbed in margins, too. And maybe businesses would be looking to cut costs elsewhere to offset that. So I think it's too soon to know exactly where it shows up. But if we're not seeing those big price increases being passed on to consumers, I think that's telling us the consumer is weakening and someone is still paying for those tariffs.
What about the potential impact we could see on higher prices, even though they're now down at the moment from the start of the day, the opening of trade overnight? How much could that impact the inflationary story, what's going on in the Gulf?
Yeah. I mean, it's one of the many reasons the Fed is in this wait-and-see mode right now, right? There's lots of input prices that are going higher, and we'll see how that gets passed on to consumers. It is obviously, I think, just too soon to see the tariff impact. For the oil impact, it really depends on how high do oil prices go, how long do they stay at those elevated levels. This type of level here, it's about where we were 6 months ago. It's not something I would be super concerned about in terms of the inflationary impact, but there's lots of many input prices that are rising now, and maybe that increases the chance of pass-through.
Are they data dependent, or is this trade war making them data resistant?
I think they are data dependent.
You still think that?
Yeah, I think they will have to be at some point.
So why do they keep downgrading the outlook for growth and leaving the median dot unchanged?
Yeah, that's a good point. I mean, I think that is telling us that their reaction function in the end is going to be dovish. They only raised the unemployment rate forecast to 10th. They raised inflation much more, and they still pencil in the same number of cuts. I think that is a dovish reaction function. But they're able to be, in this wait and see mode for now. But at some point, we could be waiting a while to get clarity on the policy outlook, but not as long to get clarity on the economic outlook.
Not to get stuck in the weeds, it's dovish relative to the inflation outlook, but it's pretty hawkish relative to the outlook for growth, isn't it?
Depending on the unemployment rate, we are at 4.5 right now for their end of year forecast. I think that is kind of the limit of what they would see as acceptable. I think we can get there pretty quickly too. That is a Q4 forecast. If we're starting to see signs that we're getting close to that even sooner, I think they're in the same position they were last year, and they're turning pretty dovish pretty quickly.
So last week, by the way, at the Fed press conference, Jerome Powell was asked about exactly that. And he said, how do we even know where to put our dots? One of us will say, what did you write down before they write it down? So there's a feeling that maybe they're kind of shooting darts at a dartboard.
How much sympathy do you have with that at the Federal Reserve? The SEP exists to communicate and articulate the reaction function of the Federal Reserve. If they no longer think it does that job, get rid of it. Who's forcing them to do it?
It's a great point. And then this raises an additional point, which is if they really have such a lack of certainty, how is communication effective as a policy tool? How much are they anchoring a market at a time when we don't understand the reaction function based on just exactly what John just said?
Yeah, no, they're really not at all. And there was this interesting bifurcation in the dots also, where you have this group of people who don't want to cut at all, and then you have another cluster who want to cut twice. Maybe Fed speak now gets more interesting. Maybe we start to see who is who. And I think that July meeting could be an interesting one where we get another month of data. And then certainly September, we'll get 2 more months of data between July and September. I think we'll learn a lot.
Exciting stuff. Looking forward to it. Veronica, thank you. Veronica
you.
Clark there at Citi. Looking forward to that semi-annual testimony from the Fed Chair Jay Powell that kicks off in the House Financial Services Committee tomorrow. An update on some of the news elsewhere. This from the White House Press Secretary Caroline Leavitt speaking just moments ago. Annmarie saying the president saw intel that Iran was weeks from a nuclear weapon.
Well, this is something that's been politically difficult for the administration almost to talk about, because Tulsi Gabbard had said in March that there was no directive just yet from the Ayatollah when it comes to creating a nuclear weapon. The Israelis said that they were weeks, and now the president is, through his press secretary, Caroline Leavitt, saying that they were weeks away. Remember, in March, I reported that the president had sent a letter to the supreme leader saying you have months to get to the negotiating table. And he continuously would say, we can either do this the diplomatic way or the hard way. And the hard way is what we saw took place over the weekend.
Just to get into the nuance there, how much daylight is there actually between DNI Gabbard and the administration? Because there is a difference between an instruction to create a weapon and having the enriched uranium to such an extent that you are weeks away from creating one if you wanted one.
Well, that's why there's nuance also in her testimony. If you go back and listen to the entire testimony, she talks about the fact, like the IAEA has talked about, that there's no country on the planet that was enriching uranium at the speed that we saw Iran do it, and the way they were doing it and getting to this 60%, this breakout period, potentially weeks away from creating a bomb. That is not the kind of enrichment you would see if you want to use for civil nuclear nuclear. And that is what the president seems to be wanting this is the reason why he ultimately, in the end, went for this military strike.
That's very important clarity. The latest then from the White House Press Secretary Caroline Leavitt just moments ago. The president saw intel that Iran was just weeks away from a nuclear weapon. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Arnott. Hey, Yahara.
Hi, John. Shares of Trump Media and Technology are rising 2.5% in the pre-market. The company just announced a few minutes ago it was planning a $400 million share buyback, which represents 8.1% of the company's current market value. Shares of DJT, though, are down nearly 48% so far this year. Meanwhile, major U.S. cities, including New York, Washington, and Los Angeles, are tightening security after Iran warned it was reserving all options to respond to the U.S. strikes. Police have increased patrols at religious institutions, diplomatic facilities, and public spaces. Officials say no credible threats currently exist, but are urging people to be vigilant. And millions of Americans from the Northeast to the Midwest are bracing for scorching temperatures in the days ahead. An intense heat wave is expanding and set to impact cities including Philadelphia, Washington, and New York City, prompting health advisories across several states. Triple-digit temperatures are expected through Wednesday, and humidity will push heat indexes to near 115 degrees in some areas. That's your Bloomberg brief. John?
It's going to get steamy. Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, Mike Contopoulos of Richard Bernstein Advisors joins us to break down this market. From New York City this morning, good morning to you all. You're watching Bloomberg TV. The opening bounce 44 minutes away. Equity futures shaping up as follows. We are just about positive on the S&P. You haven't seen much price action at the index level over the past few hours stateside. On the Nasdaq 100, positive also by 0.1%. With some morning movers, let's cross over to Danny for more. Hey, Danny.
Hey, John. Breaking moments ago, a big drop from him and hers, the online pharmacy, down more than 24%. Novo Nordisk had partnered with Hims and hers not that long ago over allowing them to sell Wegovy on their platform. They have now withdrawn that partnership. Novo Nordisk, citing issues of compounding medicines on their platform and what they call some deceptive marketing. So those shares, again, down nearly 24%. We're also seeing a drop from the ADRs of Stellantis this morning. The new CEO officially taking the helm this morning, and with that, announcing a leadership change of about 13 different people. A huge task ahead for Stellantis in the turnaround, but shares are dropping off the back of that announcement, down some 2%. Finally, a little bit of deal news. This comes from the Wall Street Journal over the weekend, reporting that last week, BNY Mellon had looked at Northern Trust for a possible takeover of its smaller rival. The CEOs had talked. Reportedly, Northern Trust is not interested in that takeover. Even so, BNY continuing forward and evaluating their options, and including a formal bid. So Northern Trust shares up just under 6%, John.
Hey, Danny, thank you. Thanks for the update. A few of the names to look for going into the opening bell. Here's some events to look for going into the opening bell and through the rest of this week. At 9:45 Eastern Time, June PMI data at 1 p.m. Eastern Time. The president meeting with the national security team. On Tuesday, consumer confidence, the NATO summit kicking off, and Fed Chair Jay Powell testifying before the House Financial Services Committee. On Wednesday, Fed Chair Jay Powell returns to Capitol Hill for day 2. On Thursday, we get jobless claims, US GDP, and core PCE. And this week, a ton of Fed speak. Joining us around the table, Mike Contopoulos of Richard Bernstein Advisors. Mike, good morning to you, sir.
Morning.
Risk worth ignoring, risk worth paying attention to. What do you do with the geopolitical risk over the weekend?
You know, I think the biggest thing for me is it just adds to what has already been a year of tremendous uncertainty. You know, first you had peaking profits in Q1, then you had tariffs in April. Now you have everything that's going on with Iran, Israel, the U.S. And to me, I think it just really shows that there's just tremendous amounts of uncertainty out there. In other words, there's scarcity for certainty. And I think that's the biggest takeaway for me.
Typically, that meant going out along the curve, sitting on the 10-year and sitting this out. Yields would start to drop, that bond would rally because people would worry about downside risk to growth accumulating. Has that story changed?
It's changed for now. I do believe that U.S. Treasuries will still prove to be a safe haven asset. when the bottom really falls out of the market. But until that happens, until unemployment, I think, is really well north of 4.5–5%, you probably are going to have a hard time rallying in the very long end of the curve. 10 years in, I think, can actually, yields can go lower, the curve will steepen. But, the 30-year, the 20-year, I think they're kind of stuck for a period of time just because of the uncertainty around deficit and future inflation expectations.
Just to build on what we've seen this morning, there's been a benumbing of market response to some pretty dramatic headlines that come out pretty much on an hourly basis. Does that concern you, that people are being conditioned to do nothing and to just buy?
Yeah, absolutely. I think there's a tremendous amount of complacency. And one of the things we do when I go out and talk to financial advisors and their clients, one of the things I always ask is, during the sell-off that we saw in March and April, were you selling, were you holding, or were you buying? And almost universally, everyone was buying. They've just been conditioned to buy, and importantly, they've been conditioned to having a Fed come in and provide that put and provide that backstop for markets. And the Fed's been able to do that in the past because inflation's been low. But right now, with inflation where it is, which is still above target, and we think will remain above target, I don't think you have as much of the Fed put there to really incentivize that buying for every dip.
To put that sort of together, is there a sense that unless yields fall materially from here, it is unsustainable to see levels where they are, valuations where they are, even if we don't fall into recession, even if we get some sort of marginal growth and earnings profitability?
For me, it's less about yields, right? Because if you have the growth, then higher yields don't really matter. And if you have lower yields, then you have this intermediary period where the reason for lower yields is negative growth, and the equity market can fall dramatically and spreads can widen dramatically. And so I don't take cutting and I don't take falling yields as necessarily bullish. Not until you reach some sort of bottom of earnings growth, not until you reach some sort of very wide expectation for defaults to accelerate, things of that nature. You have to have that happen first before the lower yields provide the catalyst to higher markets. In a traditional, scenario of market decline. Now, whether or not that's traditional this go around, we'll see.
Do you think we'll get to that point, and when?
I do think you'll get to that point eventually. When I look at equity markets as an example, just starting there, what drives equity prices and valuations is earnings growth. It's not the level of earnings, it's earnings growth. Almost universally, as recently as 2022, when you peak in earnings growth and you start to decline, staples, healthcare, utilities, high quality dividend payers, quality, certainty of cash flows, that's what performs well. There's no reason to expect this cycle to be any different. I just don't think people are paying attention to the fundamentals. I don't think people have fully bought into this idea that earnings growth has peaked and is going to decline. And if you go from 13% in Q1 to 0%, 2%, 3% by Q4, I think that's going to hurt, and you probably are going to have a bit of a rotation, particularly from the high valuation sectors.
Lori Calvasina was on, and she was saying how the equity market is taking its cue from the energy market right now. Right now, we see a very sanguine approach to what is going on in the region, given the events of the weekend and where the oil market is priced right now. You put in your note, though, beware of the transitory one-time shock story. The embargo of 1970 was technically a one-time shock, but it was entrenched. Are you surprised by how resilient the energy market has been?
Yeah, I have been a little bit surprised by it. I think right now we're sort of at an inflection point with regards to oil, where you can kind of, if this all goes away and everything else, you could have a situation where you're right back into the, maybe the 60s or even below that. On the other hand, there's an easy, you can create a scenario very easily where oil spikes to 80s, 90s, even north of 100, and provides to be a real problem for energy, oil prices, gas prices, et cetera, in the U.S. that further crimps the consumer, along with tariffs. And I think that's your tail risk. I don't know whether or not we're going to get there. We'll see what the response is from Iran over the next several days. But that's certainly a tail risk. And it has been surprising to me that oil has been very well behaved so far.
New title, Deputy CIO. Congratulations. Is it nice to play in equities too?
It is nice, yes.
Get away from bonds?
Absolutely.
The gloom and doom of fixed income, right?
The realism of fixed income,
there
although it seems like right now it's hard to know who's being more realistic about what. I mean, honestly, upside down kind of feeling right now.
How many times have we heard that this morning? Complacency versus confidence. Which one is it?
At a certain point, what's the difference, right? Because at a certain point, you either have faith in one concept, is that confidence, or is that complacency? And on the flip side, you've been burned every time you've tried to trade on this. So what is the big risk? Is it inflation? Is it a slowdown in growth? Is it both? Or is it that we are not pricing in the resilience of an economy that has really shown that over the past couple of years?
Mike, congrats on the new title. It's good to see you. Thank you, sir. Mike Contopoulos there of Richard Bernstein Advisors. Let's get back to that top story. President Donald Trump set to meet with his national security team following U.S. strikes on Iran over the weekend. Bloomberg's Tyler Kendall joins us now from the White House. Tyler, what's the latest?
Yeah, hey, John. Well, the White House seems to be walking a line here when it comes to potential regime change in Iran. We just heard from the White House press secretary, Caroline Leavitt, who said that the first priority is to make sure that there is some sort of negotiated settlement going forward here, that they do resume talks over Iran's nuclear program, but that rather President Trump was just raising the question that if that doesn't happen, then could there be regime change? She says that the president has acknowledged that it is up to the Iranian people to control their own destiny, in her words. She also confirmed that President Trump will travel to the NATO summit tomorrow morning. Of course, our allies are hoping to see some sort of negotiation going forward here. But up to this point, we really have heard from Iranian officials that they're not going to be able to get back to the negotiating table unless there is a stop in the strikes against them. But the White House so far really hasn't signaled an openness when it comes to a ceasefire. Lastly, I will leave you with that Caroline Leavitt did tell us reporters that it would be foolish if Iran goes after the Strait of Hormuz. I did just quickly catch up with the NEC director, Kevin Hassett, who told me that he is closely watching the oil markets, but at this point, he's not concerned about any future disruption.
Tyler Kendall with the latest. Look out for Tyler and her reporting throughout today on Bloomberg TV and on Bloomberg Radio. Just to go back to that conversation from over the weekend, Secretary Rubio was very clear about this. If Iran chose to do anything with the Strait of Hormuz, that would be an escalation that requires a reaction. What would that reaction be?
It feels like that would be a red line. He wouldn't go into the options. He said a lot of options are on the table. And then we heard from the former defense secretary, Mark Esper, who said, well, one option is just sinking the Iranian Navy. And that potentially is something we have seen the U.S. do in the past. The U.S. obviously has a fifth fleet that's based in Bahrain and can easily get to that. There are a number of options the U.S. probably has prepared, depending on what the Iranians do in terms of their retaliation.
The market is saying that Iran is not going to take a calculation like that. The market is saying, if you take a look at the sanguine reaction in oil markets, that why would they, to use your phrase, shoot themselves in the foot? And they're just simply saying they're not going to. Whether they're correct remains to be seen.
The headline of the morning so far, Wall Street fades escalation risk. And we'll see if that sticks. Up next, coming up tomorrow, we'll catch up with Congressman French Hill of Arkansas, Jeffrey Sherman of Double Line, the former U.S. Air Force General David Depchler, and Amberly Rowland of John Hancock Investment Management. Live from New York. This was Bloomberg Surveillance from New York City. This is Bloomberg.